I was curious about is test. Okay. So the one thing I was curious about was how to get speaker notes for the slides, like where those could show up. So if I'm plugging in.
Is it possible to run that? I guess. Yeah.
Okay. So like if I was to give the presenter view, how to do it like dual screen so that like.
Oh yeah.
If that makes sense.
Yeah, like is that just in your system settings? I don't know if
yeah, I think it's in the
system.
system.
Maybe like extended desktop, and you could drag that one.
Yeah, I think that's what it is. trying to figure out how to do the presenter notes and the split screen and all that stuff. Yeah, it's a tricky. Okay, so I think I got the general idea. It's per slide, so I just got to move the presenter view over, and then he sounds like he's recording the whole thing. So whatever I don't want, I just edit it out.
Good morning. Oh, look at that. We work. Can I raise this a little
Yeah, please adjust it however you like. You're welcome to walk around with it.
Oh, yeah.
If you do want to walk and talk too, the best view will be kind of along this center line here. That'll keep you in frame with the.
Oh, do we have a little clicker?
Yeah, and a clicker too. It should be connected, so you can try. It should be able to advance slides for you. Yep.
Okay. Good morning, good morning, good morning. ETH Denver, Biddle Week. It is a fabulous Monday morning here in Denver, Colorado on, what is it, February 26th, 2024. Thank you for coming. I'm Russell Castanero, the venture steward for Bufficorn Ventures, and I'm really excited about what we have today. You know, a lot of places have a demo day, and as for us, we don't have demo day because we're Bufficorns. And instead of Bufficorns to show off their stuff, they have rutting season. So those of you who know about elk and buffalo understand rutting season. So the idea behind that is to give our portfolio companies some time to show off what they do, really get into a deeper story about why they're doing what they're doing, what they're doing. You know, a lot of times you get these 30-second pitches, these 90-second pitches, 5-minute pitches, and it's not enough to really capture the whole thing. So hopefully, not only will you, when you watch this, be able to understand what, really quickly, each of these startups is actually doing, but also what they are, what else, like just not at a top level, but deep down, what kind of change they're trying to do, maybe why they are doing what they're doing. In one case, even the sort of story arc of their company and where they are now. As a previous startup founder, many startup founders, and as startup founders yourselves, you may find that this is really interesting and important material. What you learn from other people, you don't have to learn yourself. To start this off, though, I'm going to give right through a really quick version of what Bufficorn Ventures is and why we exist. Because why do we need just another venture capital company, venture capital firm? Come on, baby. Or maybe I'll just do it manually. There we go. So, you know, one thing that everybody knows is it's really hard to find good deals. It's hard to find deals that actually communicate what they're trying to do, that you have confidence that the team is going to be able to execute, that they have an idea that's really interesting. And so that's really hard, and competition for the ones that are good, that really appeal, is really, really difficult. On top of that, I don't know how many of you are out there that have experienced this, but there are people who like all work in one place. None of them seem to be in Web3. Like nobody in Web3 all works in the same place, it seems to me. Everybody's distributed all over. So you've got these teams coming together all over the world, communicating, coordinating, getting them plugged into the right things for them to be effective is insanely difficult. So the solution we think to this is combining ETHDenver, the biggest, best Web3 experiment running, and Bufficorn Ventures. So if you think of sort of a Web3 community fund, and it's also regen, and I'll talk about how it's regen in just a minute. So look, we have the alpha. We're the first big event in Web3 every year. Everyone's working all winter, whether it's a crypto winter or not. And they're all working hard to get their products out. Everyone knows that ETHDenver is the place you come to either hack, build a team, make something new, do something different, and show the world what you're doing. If you're a Biddler team, you're coming because it's the first big hackathon that you can get with lots of bounties. If you're a team that's a startup, this is the place where you're going to find your customers, your partners, all those kinds of people. In the past, we've had unicorns come out. We've had great successes. 1inch, POAP came out of it, Pool Together. Even Moloch DAO, even Bankless has come out of ETHDenver. And there's many, many more stories. I can't get into all of them. We've got all of these people coming, all this energy. So there's no question that we will get another unicorn coming out of ETHDenver sometime in the next year or two. And Bufficorn Ventures will be there to help them. So we do have this front row to the alpha. We've got the hackathon going on. We've got pitch fests going on. The BV Pitch Fest is going to be coming up on Sunday. And lots of really good deal flow. Most of it, we can't even handle all the deal flow we have. Deal flow is not our problem. We have all the different communities of communities that are a part of ETHDenver and a part of Spork DAO that are helping to foster these startups. And everybody says that. You say, oh yeah, you're part of us and we're part of a team and everything. But because we leverage the regen angle, there's actually something in it for every community member to benefit from success that comes out of BV portfolio companies. So we both invest in super early stage and early stage. We aren't really heavy-handed about how we invest. We don't say we're the only money in. We're happy to have lots of people invest together. More makes us better. Our investment strategy, most of you know this already, we're making mostly safes. These are really early stage investments. Relatively small checks, $25,000 to $150,000 for teams that will produce some real deliver on some serious milestones. And some of those milestones may include things like being piloted at the next ETHDenver. So if you look at last year with ETHDenver, I think we had 11 different pilots. This year, you've got quite a few of our teams that are out there making things happen. Last year, I think Blockade had their huge promotion that went out during ETHDenver. So we've got a whole lot of different things happening. And as far as terms, we used to make this really difficult. We don't do that anymore. The reason I bring this up, not like I'm not asking anybody to invest, because we only work with investors, actually. However, what I want you to say is 20% of anything that we do make goes back to Spork DAO. Okay, so that goes back to Spork DAO, and Spork DAO, all of you should be members. If you haven't, make sure you stake your Spork. They can get that 20%, those can come out as dividends to all of our members. So that means that whenever you see a Bufficorn Ventures company coming out, their success is actually your success as a Spork DAO member. Okay, enough about us, enough about Bufficorn Ventures. This is really about the teams that we have. And so I am really excited. Let's see, Who's our? Let me check real quick. Who was first on our list here? Because I just shouldn't wear these glasses. Oh, so much better. Let's see. First up is. You should be coming up here if you are first up anyway. Is Split. So is Brett here? There he is. Okay. You ready to come up? Oh, just bring it up. We can plug you in up here. So Brett came on the beginning of last year with Studio Page. They recently changed their name over to Split Social. He's going to talk to you about them. I'm really excited about what they're doing. I like to describe it, and he can correct me on this, as if YouTube and Patreon had a baby that turned everything we know about streaming media upside down. So here you go. I'll move my laptop, and you can have the whole area.
It's a beautiful baby.
It's a beautiful baby. Split Social is a beautiful baby.
I just got on my Uber 2 minutes ago.
All right. Are we not yet? There's no signal? No signal? Oh, said there's no signal from it.
No signal
From your thing here. Nothing? Want to use my laptop? Can you?
Okay.
Want to use mine?
Yeah. Can I email this to you?
Do you have a direct HDMI? We can try without the dongle or something.
Yeah, I do have a direct
Yeah,
HDMI.
we can. Let's just try that first. That's okay with me. Just the apples required.
Is that better? Okay.
Do I choose
Lock
a
and roll it.
window, or is it just whatever window I'm on?
It's mirroring you, so you can.
Yeah, I'm good.
Okay.
Hello. It's a lot of lights. Not used to that. Okay, so the premise for Split Social is that YouTube's first principles are flawed. If you're not paying for the product, you are the product. So on YouTube, advertisers pay for 99.6% of their revenue. And as a result, we now have these algorithms that serve advertisers and not the people. So we have increasingly inflammatory content. It tells us that we're worthless, that we're not enough, that we need to buy products to feel good about ourselves. And the reality is it's tearing apart at the fabric of our society. We're living in an increasingly polarized world, and it's because of these first principles. We know this because we've talked to hundreds of creators, and the creators are tired. They feel like they're running on a treadmill, like they're having to work for these algorithms, like they're having to constantly sell products, and they're not able to focus on their art and their creativity. And this is how society works through our greatest challenges, is our art and our creativity. So on Split, we're flipping the script. Instead of advertisers paying for all of the revenue of the platform, the members pay for the platform. So members pay $10 a month. They get access to the entire library of creators. There are no advertisers to take over that experience. And then there's also cooperative benefits within the network. The way a member's money is broken down is each month, $5 is paid out to creators based on watch time. Then there's the cooperative projects, which allows people to fundraise for future creative projects that they want to put into the ecosystem. And then the remainder is paid to the cooperative to help build out the platform and grow the user base. So the $5 creator earnings, it's all paid out based on watch time. So depending on how many seconds a user watches of each creator in a month, that determines where their money goes and how much the creator is actually paid. And because it's not ad-based, the payouts are 15 to 100 times larger per video view. Right now on YouTube, the average view is worth somewhere around 0.3 cents to the creator. Then there's the cooperative benefits, which is, this is essentially allowing creators to talk about projects that they would like to make in the future, and then having members vote on those projects that they would like to see come to life right before them. So this is creator grants and then also impact grants within the ecosystem. The creator economy is expected to hit $500 billion by 2026. This is one of the fastest growing economies in the world. Even further, the streaming market is expected to hit 1.9 trillion by 2030. Now, obviously, we're not going to capture this entire market. We're very focused in the outdoor space. This is most of the creators that we're talking to. So we've been talking with dozens of outdoor creators that are making adventure content. They're very excited, and we think that this is an excellent beachhead for us because we can capture that market. And they're also very rebellious people that understand models like this and want to make a difference. So we have a MVP built, and we are currently taking that MVP to market. So we're talking with creators. We want to fully launch our beta at the beginning of next quarter. From there, we want to build out the remaining features like search, recommendation algorithms, all of that, and go for a full launch in Q3. After that, we want to establish product market fit, and then move into the immutable on-chain components of the platform. We're not sure exactly how to solve that, and we don't want to move things on chain until we know better how that's going to work. Team, there's myself. I'm a two-time founder. I have a past building subscription video platforms out and growing those subscription video platforms out for large brands and creators. Peter Laird, senior developer and technical leader. And then Ashton Wagner, who has marketing experience and analytics experiences, which are very important for this platform. So going into our MVP and giving everybody a sense of what we have. Right now, this is our platform. As you can see, we're going with the creator focus. Members can come in here and they can watch creators on the platform. They can engage with creators. Each creator has their own page. This is very brand forward. You notice there's no other advertisements or anything taking people away from this experience. Where they can upload videos and people can watch their content. Then as a user, when I watch content, I'm able to come in here and I'm able to see what creators I've watched, how much I've watched of their content, and what percentage of my subscription is paid out to that creator. So unlike YouTube, where it's a black box and I have no idea what's going on, here I can actually see who I've supported and how much I've supported them. I can also see this breakdown by creators in general. From there, we've also built out all the CMS components that are expected for a platform like this, so creators can build out their pages, they can upload content, they can get started on the network fairly simply. Yeah, so that's Split Social. I think that there was a Q&A component to this, but yeah.
Hello? Oh, there you go. Hey, can you see me? I couldn't see anything when I was up there. So can you talk a little bit more about like how a creator today, what they would have to do the same kinds of things that Split Social is going to do? Like what kind of hoops they would have to jump through to do what you're trying to enable them to do?
Yeah, so right now there's all of these one-off subscription video platforms like Patreons, Uscreen, where creators need to go to another platform, set up a subscription service, and market that platform to their audience. It used to be fairly simple to do this, but now there's over 500,000 of them on the market. So it's becoming increasingly difficult for creators to get subscribers on those platforms. And a lot of times in the creators we've talked to, it feels like they're begging for support because it's just them, it's $10 a month, and it feels a lot more like a donation or charity towards that creator.
Great. Now, here you go. Scott?
Hi, Brad. Thanks for that presentation. I was just wondering if you had any plans to integrate with Farcaster, because that seems to be a platform that has a lot of buzz, and maybe there's an opportunity there to serve a lot of videos.
Yeah, I don't know about integration yet, but I do think Farcaster is a pretty great example. And what Farcaster is doing with all the open graph items and frames, I think that they're definitely an excellent example of how these platforms can work and how they can really improve community. If not integrating, I'm definitely learning from them right now, and their community components are awesome. I would like to build a lot of their engagement tools and things like that into the platform.
Yeah, like with Farcaster, you could essentially token gate, right? And do it that way if you just decided to go down that road. So
yep,
that'd be kind of cool. You have a question?
Hey, thanks for the presentation. I was curious if there's a token integrated into this platform, or how you think about like leveraging crypto and tokens versus just building something that works for a user.
Yeah, so the concept of integrating Web3 is putting all of the analytics on chain. So tokenizing the seconds watched and tokenizing the governance for the cooperative voting. So that way members and viewers actually have a say over how the platform operates, and it can't be taken away and ruined in the future, making it more immutable. And then I think that there's also different layers of engagement that come out of that. So as you're earning token for a creator for watching their content, then that kind of gives you a proof of patronage within that creator's ecosystem. And in the future, it will give you different types of engagement opportunities or the ability to vote on different things. But essentially giving the community some type of ownership over these creative spaces.
So one question I have is, how do you intend on building up enough of your creator base, right, to make it so that subscribers are going to want to come in? So what's your sort of strategy on that?
Yeah, so right now it's a lot of cold emails, a lot of DMs, but we're kind of breaking through at this point. So talking with some large producers for different content creators right now. I think the focus is to build up the content first, focus on creators that are making excellent outdoors content, and really just owning that outdoor space. So everything from rock climbing, mountain biking, a lot of the content creators that we have on the platform, and then hitting a critical mass from there. With the producers that we're talking to, these are some of the biggest names in the industry, and it would be nice to be able to do a top-down approach, get a thought leader, get somebody's buy-in in the space, and then that will bring all of the creators that look up to them and want to create with them.
Now, one thing I understand about the stickiness of what you've got here is once you have, and I like the idea of keeping it like all outdoor, right? Then you've got viewers who are interested in the same sorts of things. So one creator brings them in, they start looking at their content, and then they can see other creators' content as well that they might be interested in. So whereas something like Patreon, you sign up for one creator and that's it. There's not really any incentive for you to grow or to grow from somebody else's list of watchers, right? That's the biggest thing. So on a Patreon, you only get access to that one creator. So on Split, there's opportunities for collaboration. So behind one paywall, I get access to all of the content on the platform, and that opens up a lot of different opportunities for collaboration. So we're hearing with the extreme sport athletes, you know, they like working together, they like collaborating, they cheer each other on at the X Games, but the way that they make money in the current paradigm is they have to compete with one another for views. And they have to compete for subscriptions and sponsorships and all of that. What they love about Split is this is an opportunity that they can work together. They can market together, they can create content together, and they can, you know, it's more of a community. And they like the idea of being able to promote other creators on the platform and being able to point to content that their friends are making. Great. One last question is, so I've been a YouTube Premium user because I despise ads. And so I'm paying not too much less than $10 a month already. For somebody who is already a YouTube Premium, so these are your people just watching it, like what would their experience be? They come in, they set up an account. How would it be different than the typical YouTube experience that they would see with no ads, but just that? What would that be? How would that be different?
Yeah, so there's two sides to it. So first, they have the opportunity to support their favorite creators. YouTube Premium doesn't necessarily increase the payouts to creators, it just takes the ads off of the platform. The other side is we're hoping to have exclusive content on Split. So in this case, they would be able to see feature-length films, behind-the-scenes content, things that wouldn't make it to YouTube that creators are looking to give to their most exclusive audiences. Thank you.
We good? So the next company is Smart Funds, and I believe smartfunds.xyz, right? That's the URL. And when I first saw this, they pitched last year at the Buffett Tank Pitch Fest. And when we saw what they were doing, and I'm not going to use my words to describe it because JJ can do it much, much better, it kind of blew my mind. And what it can do to bring conventional sort of minded investors in on blockchain and tokenized investments, as well as the other way around, like melted my brain a little bit. And so I'm really excited that JJ is going to be able to talk to us about this. Are we live with the video? We're good? Okay. Here you go, my friends.
Thank you, Russell. All right. I am JJ. I'm one of the founders of Smart Funds. This is my, I think, 5th time at ETHDenver. So first time on stage, excited to be here and thrilled to be a part of the Buffett Ventures portfolio. So anyway, today we're going to talk about Smart Funds, which is a platform for alternative investments. So alts investing, and before I jump into that, I know normally when I'm pitching, I have to kind of translate the crypto concepts for the TradFi folks. I know today I get to translate the TradFi concepts to this audience. So alts investing just means anything in the private markets. But alts investing is bigger than ever, but is a very fragmented and inefficient experience. So first of all, there's a bunch of legal complexity that makes participating in any alts investing very difficult. What you see is that family offices, wealthy people have family offices or full-time people just to manage the back office of what's required to participate in alternative investments. And then it's a very opaque market. And this is probably the biggest problem. So in using the most common example, secondary transactions, you have a very fragmented manual deal process. So what happens is you literally have a human being who goes out there and matches buyers and sellers and then kind of haggles a price in between because there's no publicly available data on pricing. So he just kind of uses his insight into market knowledge to kind of broker this deal, and usually have this 3-month process of I want to sell some shares, and then the broker goes out and finds a buyer, and then after the deal gets papered over, you're talking about a 3-month process. If you saw the news, Carta left the secondary markets. They got kind of caught cheating on this problem. They were trying to access personal identity information from cap tables in order to kind of grease the skids on connecting buyers and sellers. So they weren't necessarily, it was inappropriate for them to be using cap tables, but this is an example of the difficulty in matching buyers and sellers. And then, of course, this lack of market data just means that price discovery is difficult in all secondary markets. And then, of course, lack of liquidity. So the only strategy that you have today in secondary markets is a long-term buy and hold. And that stems from the 3-month transaction process. And so if you think about it, the only sellers in the secondary markets are either founders or early stage investors who are up a lot, or employees who just want to get married or buy a house, and so they need some liquidity. Hopefully that's going to pop right back up. And so they need some liquidity, and so they don't necessarily care about waiting for the IPO. They will just sell at any price now. And the buyer is a sophisticated private markets participant who will look at the deal and he'll say, this thing has 3x before it goes public in 4 years, so I'm going to buy this now and ride it 3x and sell later. But that's the only use case because of the 3-month transaction process. And as a result of this, what this means is the only demand in secondary markets are for that very top issuances that are guaranteed to go public, or if it's not guaranteed to go public, maybe it's an Elon Musk company. But for that sort of mid-tail of companies that are good companies, but not necessarily on a definitive IPO track, no market for those companies in the secondary markets. And then unpredictable capital calls, right? Blockchains help eliminate middlemen. Capital calls are kind of currently this necessary middleman in the process of alternative investment transactions. So Bain & Company, which they do have a pretty robust crypto arm, they did a long-form study they published in the last month or two that says, hey, by the way, tokenization could revolutionize alternatives. And it's a very long research report, and it goes on to basically say all the problems that I just listed can be solved by tokenization. And I know you guys in this audience understand that to begin with. But tokenization hasn't happened yet. We have seen progress in tokenizing dollars. We've seen progress in tokenizing treasury bills, but we have not seen any progress in tokenizing the illiquid stuff, real estate and pre-IPO equity and those kind of securities. And we've been talking about it for 5 years. And so why hasn't it happened yet? Well, first of all, again, compliance challenges. That of the compliance progress that's been made on tokenized securities, you're still talking about limit order books that trade things that are tokenized securities, not on-chain tokenized securities markets. That gap has not been bridged yet. And then the cold start problem. So if you go to a company and you explain to them all of the benefits of tokenization, and they say, great, how do I take advantage? And you say, well, you have to tokenize your entire company, right? And they say, well, I'm not ready to make that full jump yet. And so there's a little bit of a cold start problem. So Smart Funds solves that. Smart Funds simplifies compliant tokenization for off-chain securities, and that's powered by our Smart SPV product. So let's talk about our Smart SPVs for a second. So Smart SPVs are a tokenized deal execution platform. Now, if any of you have used AngelList or Carta, there are some venture-backed companies in this space, Sidecar and Allocations among others. that are all competing to offer kind of the best on web-based product to manage an SPV, a special purpose vehicle if you're not familiar. They help you kind of pool the capital and manage the cap table. And so if you've ever used that product, and if you're in the private markets, you probably have, then you know exactly what our product does. It's, from a feature perspective, almost the exact same product, but the big difference is that our back office is automated by smart contracts, and that means the cap table is tokenized. And so this is a big deal, and which we'll talk a little more about in a second. The automation by smart contracts enables us to offer a better, faster, cheaper product, but it's the tokenization of the cap table which is really the magic here. Because now that you've tokenized the cap table, you've actually created an on-chain derivative. And so what I mean by that is the original security is still exactly where it was before, and what you have done by using our SPV is you have now created a security that lives on the blockchain that has a legal claim on the underlying share. So it is still a security. This is still only for accredited investors, but we have now created a derivative of the underlying share that lives on the blockchain. So why SPVs? Let's talk about that for a second. The simplicity of compliance, right? It is much, much easier to transact SPV ownership interests than the underlying shares itself. Everyone in the private markets is already very comfortable with SPVs, no matter what asset class you're in, where you are on the capital stack. You've almost certainly used SPVs, and maybe you use them very frequently. And then most, kind of an underrated point is that, CEOs want to keep greater control of their cap table. They want access to secondary markets, but they'd prefer to keep control of their cap table. This gives them the opportunity to both keep control of their cap table and easily access secondary markets. And then versatility. SPVs can be customized to go after a variety of different asset classes. But most importantly, the way to think about this is that our SPVs are a legal wrapper for off-chain securities. And what this does is it creates a new primitive for on-chain alts markets. Now that we have tokenized this cap table, now we can build on-chain products on top. And so this is not our unique legal theory about using SPVs as a compliance framework. This is from a private markets research report done about 18 months ago that called SPV ownership units the new atomic unit of private markets. And they note that SPV interests, like LP interests in funds, they sit on top of the cap table and can be traded permissionlessly. What we've done is we've added the tokenization piece. So smart funds will operate the first two alternative primitives, which is secondary and private credit. We think those are kind of key primitives to making the ecosystem work. But of course, we're certainly excited about all the other things that are going to get built on top and other protocols we'll partner with. So effectively what that looks like, it's very straightforward. You just take your existing holdings, you wrap them in an SPV, again, something that people do all the time in private markets. And the cap table is then tokenized, and then any whitelisted protocol on top will have access to all of these tokenized cap tables. And so it is sandboxed. It will be only for whitelisted protocols that will be KYC'd and for accredited investors as well. Making sure we only have accredited investors is very important for the compliance aspect and the marketing rules. So of course we hide all the blockchain stuff. Now that we talk about how cool it is to tokenize, our target customer is legacy finance and TradFi, as well as being able to bring individuals into private markets. And so you're still inviting people to your deals via email. They can still subscribe via a bank wire, and the transaction is still tokenized on the back end. Now this is important because automating the back office expands access to private markets, to these alternative markets, for both participants and issuers. So just very briefly, because we've automated the back office and we've made distributions a single one-button push operation, now all of a sudden you can go down to very small ticket sizes in secondary markets. Again, today, secondary transactions usually are starting at 6 figures and up. Because of the complexity of the transaction, there's no such thing as a $5,000 secondary transaction. We can change that, and certainly for issuers as well, because now that you can reduce transaction time from 3 months to minutes, all of a sudden you bring speculation and new market participants onto the buy side of these alternative markets. And then most importantly, providing this framework will bring individuals into alts markets. Right now, individuals hold over 50% of all global wealth, but only have 5% of exposure to alternative markets because of all the complexity. So there's $150 trillion in market wealth that cannot access alternative markets today. And so the same Bain & Company research report did a nice job of kind of summarizing the opportunity here. It says the tokenization of alts will add an incremental $400 billion in annual revenue. That's not the market size, that's the incremental revenue opportunity. So obviously this is a very large opportunity. We have multiple revenue streams from our different products. And just to put that in perspective, we're talking about an order of magnitude cheaper, as well as an order of magnitude less time to complete a transaction. We have we're launching soon, but we already have a bunch of customers lined up. They're very excited about being able to have the access to the fastest, cheapest SPV out there. We have some wonderful investors, Bufficorn Ventures included, and partners that have enabled us to offer this product with the blockchain stuff hidden. And we'll be adding partners, investors, and customers to the list very soon. My co-founder and I, John, have been working together on the kinds of products and services that allow us to onboard institutional capital on-chain for 5 years. So this is a lot of the result of some things we've learned along the way about compliance roadblocks and about practical realities of why tokenization hasn't happened yet. We're building an advisory board of well-connected individuals in particular verticals that we're wanting to penetrate. And so please don't hesitate to reach out if you have any questions or want to learn more. But before I do that, I'm going to jump over and we're going to run a quick demo here. So great. So what you're looking at here is the dashboard of an SPV for Hot New Startup, not very cleverly named. It's a 250K deal. What you can see is that 85K has been closed. There's no additional commitments. It's currently open to capital, and you can see over here on the right the contribution chart. So a little below that to the left, you can see the data room where you can download the due diligence necessary in order to make your decision. You have the information about the deal. It's a 0 and 10 fee structure. There you have the cap table. And an activity feed of all that's transpired with the vehicle. To quickly run through the admin dashboard here, the important thing to note on the settings page is that there's an opportunity to choose between private and public. You can, if you're running a deal, you can raise privately from your existing network. If you don't fill out the allocation, you can switch over to the public setting. It will then show up in our marketplace, which again is designed for compliance with 506c marketing rules. And other accredited investors will be able to participate. Data room, very straightforward. You can add additional documentation. Investor reports, this is more for LP specific, perhaps tax documentation. So this is an example, you would be able to upload a K1 for a particular investor. This is, as we move down to the investor tab, this is a list of everyone who's been invited to the deal, where they are in the process, if they've closed yet. CRM built in so you can communicate with some or all of your syndicate. Invitation requests, if someone in the marketplace does see your deal, they're interested in it, there's a one button they can push. It shows up here, and the GP has one button to push, or the deal manager, I should say, has one button to push there that sends an email invitation to that prospective investor. Similarly on commitments, the commitment tab, if someone has committed but not closed their capital, that will show up here, and there'll be one button to push to send a capital call email. And then most importantly, contributions. So what you see here is that there's a variety of people who have already closed to this deal, but if we go over to the middle to the transfer method, what you see is that some people have closed using USDC and some have closed using ACH, using traditional banking means. So again, that's what's important here to note, that even the investors who use ACH, that transaction, as you see on the right column, is still minted. And so whether or not you use crypto to deploy or not, the automation and the tokenization still happens. So let me go over to a different vehicle. and I'll invite an already KYC'd account so you can see how fast it is to onboard a new investor. So we're going to invite an investor, and this account is from a dummy profile I have here. Minimum, maximum allocation, and shared carry. So basically everything you need to run a venture capital early stage syndicate is already built into the product. We click send invite, and it's that straightforward. So now I'm going to switch over to another profile here, which is the profile that I invited, but what you can see is that it already knows that the investor we invited is Tom Brady, and that Tom Brady is an accredited investor, not the real Tom Brady, by the way, because Tom Brady's already KYC'd and been verified as an accredited investor in our system. So now I'm switching over to the email of the new profile. There's my email invitation to invest in this deal. I click Babe Ruth has invited you to invest in Super Hot Round. We click on the deal. And this will show you, again, how quick it is to onboard new capital in a compliant fashion. So it's going to check to see that we are authenticated. Again, for compliance purposes, you can't have, you have to make sure that you're inviting only accredited investors. So we take a look and we accept the invitation. We've done our due diligence. We accept invite. Now here you see it knows that we've been KYC'd and accreditation verified already. If you have not done those things, it'll send you to our third-party partners. Those things are handled off-site. We then have a dynamic NFT which tracks your investor metadata. We call the investor passport, and that investor passport contains your information. So we'll be able to support a variety of different KYC and accreditation providers going forward. Here you're actually signing documents. We're using electronic signature, so I'm going to sign first. And then there we go, the documents have been signed. Now I'm going to go ahead and download those documents so that we can actually see what we signed. Obviously don't sign documents before you've read them, unless you're on testnet. So now we're going to go ahead and download what we signed. And this will obviously show up in the investor reporting tab as well. But what you see here is the electronic data metadata signature page for compliance with electronic signatures. So this is for the Super Hot Round SPV. Tom Brady is the signer. Here's the date of the transaction, the email address, the IP address, all for compliance with electronic signatures. And if we go up here and search elsewhere for Tom Brady's name in the documentation, we'll see, sure enough, there is his signature on the subscription agreement. So you have actually signed legal documents. We'll go ahead and close that out. So we have now signed documents, and now we go over here. And here, what you notice is that this is the first time you've seen anything related to a Web3 wallet at all in this product. And so here you have the option to close with USDC or via ACH, or just make a commitment for the time being. I'm going to go ahead and close with USDC. That's the most straightforward. So we go ahead and connect our wallet. And we're going to make an investment of $7,500. Any second now. There we go. All right, it is that simple to deploy capital into a legal compliant vehicle with an on-chain cap table. So now I'm going to go just take a look back at the GP side, the deal runner side, and now you can see it's going to change because it knows that Tom Brady has signed his documents. There we go. And now if we go down to the contributions tab, we will see that, sure enough, in this new vehicle, there is the new transaction of $7,500. And this is the important thing. Everything that we've done today is leading up to this, which is the on-chain cap table. This is your subscription receipt. So this is a legal receipt of an investment in an SPV for 7,500 shares of Super Hot Round. And as we click through to Super Hot Round, this is the cap table. So again, this is all the magic is all leading to this, which is on-chain cap tables. And now Super Hot Round now has a legal security that lives on chain that can be transacted in compliant on-chain private markets, alt markets products. Anyway, thank you, and I look forward to questions.
Thanks. Any questions anybody has? I've got some. So were those live transactions you were doing in that demo?
No, this was a recording, but that was live when I recorded it.
It was live when you're. So what chain were you doing it on?
That was Base Goerli. That's actually why they just deprecated Base Goerli.
Sure.
But we're still planning on launching on Base.
Well, I just every time I see you do it, and it's actually you've cleaned it up. It looks really nice, a lot nicer now than it did a year ago when you showed it to us at BV. I don't know how, like as somebody who has used Carta on both sides and everything, like this is such an impressive tool, and I hope that that it's getting out there and more people are learning about it. As far as your KYC process, is that something that you do inherently, or is that something that that can be outsourced to whoever? Like if you're working with a certain group already, then they have policies. Can you outsource it to them to do the KYC, or how does that work?
So we have integrated, and first of all, thank you for the nice comments, Russell. We have integrated an initial partner for both KYC and accreditation, so we have one of each for the initial launch. Over time, we'll be able to support any and every reliable third-party accreditation provider and KYC provider, which goes into how we structured our investor passport. The investor passport as a dynamic NFT can point to any third-party source that we deem as legitimate. So as we go on, we'll support whatever KYC and accreditation providers kind of win in the marketplace, and certainly there's a bunch of great progress being made there on on-chain versions of that now.
Well, and are there any regulatory issues that I know most things that we do here that are securitizing anything have regulatory issues, and I know that you've gone out of your way to address those. But are there any specific ones that are still sort of in flux, and you're working to make sure regulators see these as legit?
Yeah, I would say we spend way more of our time dealing with compliance than smart contracts, which we'd much rather have it the other way around. So again, like the whole purpose of what we're doing here is all based on the simplicity of the compliance framework around SPVs. Just starting with that makes the entire process 10x easier than if we were doing the underlying security itself. Now that being said, there's still a bunch of small print. It's that the major requirements for transactions are accredited buyer, accredited seller, and since we have accreditation credentials required to access our products, everyone is already accredited before they're able to even have the opportunity to buy or sell. So from that perspective, the major compliance issues are addressed by our choice of SPV. Is there a bunch of fine print that we're going through and structuring certain clauses in the operating agreement and the PPM for the specific SPVs? Yes, we're going through that with a fine-tooth comb just to make sure. But again, it's the SPV compliance framework that already simplifies things greatly. And then from there, certainly there's still plenty of small print. But the idea is that we're trying to abstract that away so that as long as you're an accredited investor, it's a seamless process.
Cool. And one more question I have is, if you were, and I know you can't throw out exact numbers because things are different, but if you compare like the cost of setting up an SPV with smart funds for a pretty straightforward investment like a startup, and you were setting it up there, what kind of cost difference are you looking at? Like, is an order of magnitude? Is it for doing something like a $10 million raise or something like that?
Yep. So the amount of the raise is irrelevant to the costs mostly. So SPV pricing across the board is extremely messy. Basically, everyone out there has a slightly different pricing model because of the complexities involved in setting them up. There are some things that are out of our control, like blue sky fees. So if you when you file an SPV, depending on which states your particular investors come from, there are fees associated with filings you have to make in those states. And they can be $0, they can be $5,000. And so that has nothing to do with us. That's a pass-through cost that is charged by states that typically averages about $1,200 per vehicle. From there, it also sort of depends on the, extra bells and whistles that you might add to whatever your SPV is. Today, we are cheaper than everything else out there. And again, that all starts because we can automate the back office. We're just able to scale our operations in a way that none of the other providers can. But so today we're cheaper, but within 6 to 12 months, we expect to be an order of magnitude cheaper as we finish automating the back office. We've automated the key functions, which are subscriptions, redemptions, and fees, and the kind of typical fund admin stuff. What we have not automated yet is tax and K1, but that's coming. So for now, that tax and K1 is just a pass-through cost to our partner. But as we automate that, certainly for the venture capital use case, that goes away as a cost. And at that point, we'll be at least 50% cheaper than the next cheapest option on the market. And so, when you're, typical customers like an angel syndicate, and who doesn't have a formal fund, but they do a bunch of deals every year. And if they're doing 50 deals a year, and there's many angel syndicates that do in normal economic times, and you're doing 50 SPVs a year, and your current market rates are starting at 10K and up, you're looking at 500K a year in SPV costs. So in order to reduce that by, today 25%, but getting to 50 or 75% over the next year is a pretty substantial cost savings over time.
That's great. And one last question, unless there's more up here. Oh, there is one. Hang on.
Awesome. So it sounds like you have some great traction with the institutional it sounds like you have with the institutional investors. Curious how this is being received by the equity sellers and what their biggest concerns are.
Yeah, great question. So it's being very well received with a lot of trepidation. And this is true of, if you've ever tried to onboard TradFi into anything on chain, right? Like they're half fascinated and half terrified. We have a lot of folks in our pipeline who say, this is awesome, I just don't want to go first. We have some folks in our pipeline who are willing to go first. So I'm very excited to see kind of what snowball effect happens after we get, number 1 and number 2 on chain. So the reception is great, and the need is even greater. So, a lot of private companies are underwater after raising money in 2020 and 2021 at wildly inflated valuations that are not coming back, and now they're stuck, right? Their valuations for their company are underwater, and in the current market, there's zero demand for their secondary shares. We haven't really started kind of formally outreaching to that group yet, but there's a lot of them that need something like this. And so, the folks that have the options are still waiting to see other people go first, but there's a lot of folks out there without options that didn't have an alternative before this. So a lot of interest, a lot of caution as they dip their toes into the water, but we see a tremendous amount of interest in this concept broadly, and as people get comfortable with it, we think it'll really snowball.
Great. Last question, and I should have asked this to Brett as well. Are you raising? And tell us about it.
We are raising. We're closing some things right now, so I'm not ready to talk about how much left we're raising or at what price, but we are raising and maybe raising a little more later this summer, so this will still be worth talking about for the next few months. We're, as I noted, we're about to expand customers, partners, and investors, and so we'll sort of we'll talk more as soon as that's closed. So we'll leave a couple things under wraps until then.
Great. Thank you so much.
Thank you.
Come on. Thank you. Good job. I'm running up and down the stairs because it's a lot more fun to be up there and watching from up there than down here. So while Marguerite connects her laptop, Marguerite represents Blockade Labs, and they were another company that came last year during ETHDenver and applied via our Buffett Tank Pitch Fest. Really interesting format we came upon was we asked startups for a 90-second pitch. So they have 90 seconds to make their pitch. If they can't make it in 90 seconds, then they're out. And a bunch of people said, well, why do we do that? And the thing that I was like, if they can't say what they're doing in 90 seconds, then most people aren't going to pay much of attention to them anyway. So this forced it. And it was really hard for a lot of the companies to do that. But I think any startups that are out there, if you don't have your 90-second pitch done, you're missing a huge opportunity. So JJ and Marguerite both nailed their early pitches. And are you ready to go?
I wanted to do presenter mode.
Mm-hmm. You can. So are you? What?
This is one screen, but then like
You can. Yeah.
but then I'll
Oh, you have to. Hang on, we're tech stuff here. Dun 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 dun.
this one.
No, to that one.
Sorry.
Oh wow, the things that are happening on the screen right now.
I don't know how to undo that. Okay, I can.
Let's see. So you've got it here, right? And then you've go into
So you could present, but I don't want to do a split screen.
right. Let's do that. Exit. Okay. Always practice your slide. Now, where is it? There. Let's see. Function. So we got a split screen. What side is the?
That's the audience window. It says enter full screen mode.
That's the actual. You only turn on split screen. You've got another monitor. That's a good question. Oh no. This is really hard, everybody. Tech support. Let's see. Would the next person like to come up and talk while we figure out this problem? Or can you do it with?
Well, I can. Yeah, if the next person wants to go, I can go after.
I think because I think Joseph is still on his way.
Oh.
Do you mind? Can you just do it without the?
Without the notes?
Yeah.
I could just leave the notes open.
Sure. Let's switch you back here. Is there? Does that work?
Yeah.
Do you want this or do you want hold it?
I'll hold it. That's fine.
Okay. Great.
All right. You guys get to see my notes. So I'm Marguerite, CEO of Blockade Labs. We recently did a demo day for a tokenomics cohort, so this is similar to that demo. But what we do is we used your natural language to create 3D worlds and environments on demand. And so I'll give you a look at what that looks like. So we have various tools like a sketch feature that give you users more control in a 360 design space. And then you use your natural language to then generate and autocomplete the prompts that you have provided. Sketch being an example of a prompt here. Then you can use Remix, which allows you to change the styles. So once you have an underlying structure that you like, we have pre-made various styles, and you can also create your own. We launched about a year ago, and quickly became the #1 environment map generator in the world. So we're approaching maybe like 11 million of these 360 worlds created by our users. About a year ago is when we launched this product. And right out of the gate, we had massive traction with users that this was a whole new type of experience and a very difficult problem, one that hadn't been making 360 skyboxes is a very difficult problem for technical artists, and so there's not a huge amount of them or big supply because artists don't really enjoy making them. So therefore, on your various game asset marketplaces, there aren't that many. And so this unlocked the ability for not just a technical artist to make these 360 panoramic images, but also for artist use. And so with this, while we're doing the 2D 360 images, that was just the beginning. We've been able to push that into the realm of 3D. So I'm going to give you a story of one of the example users that we have and how they use the product. This is Echo, a person having fun on the internet who has an idea. She's got an idea for a game based on an inside joke. If that sounds like a niche project, well, it is. But it doesn't need to have a big addressable market, maybe just one, her best friend, to be worth doing, so long as it's easy. And it is easy. Within a few minutes, Echo can iterate on her idea a dozen times before arriving. The world she creates surrounds her, but it isn't actually 3D. It feels 3D, but it is much faster and easier to refine before full spatial rendering. Over the course of the next 5 minutes, Echo identifies and tweaks a half a dozen visual details to her preference using the Edit tool. Then the scene is almost perfect, but only from her central viewpoint. So when you're creating as a center viewpoint this 360 projection. But then she presses the button marked 3D, and the world comes to life. Suddenly, she can walk around the space, and it feels real. She can walk behind houses and see what couldn't be seen, because it didn't exist before. She pressed the button. AI is a fancy form of autocomplete, and we use the information we do have, what the scene looks like and obviously contains to create what we don't like ambient sounds, light sources, and more. This is examples on the scene of some of the 3D R&D we have. And that is an important word. The scene Echo has created is a beginning. It's a seed. And at Blockade, the same technology that lets us turn a 2D scene into a realized 3D world lets us expand that 3D world, arguably indefinitely. Internally, we call them world seeds. For this reason, for this reason. Echo could stop right now. A seed can go unnoticed. Its potential never expressed, but it can also be tended, nurtured, grown into something more. That whole process took less than half an hour, and the iterative loop of playing your game or exploring your world, finding things you want to improve, nuance or expand, tasking your AI assistant to make those improvements, and then repeating the process until you're satisfied isn't work. It's a more productive form of play. Now Echo created this game really just for her friend, an audience of 2. But world seeds can be connected to build even larger, more complex and diverse settings with proper credit and token rewards attributed to each creator. And although we've talked about this from the perspective of games, since entering our paid beta in August, we've discovered a lot of other folks who think like Echo. So our users also include folks in architecture, entertainment, and education. Simply put, if we make world building easy, they want it, and they will pay for it. And even with the full vision only partly realized, we've already got the numbers to back it up. So we are currently approaching 500,000 ARR, which is pretty exciting for us. We had just launched monetization in August. So this is our smart environments roadmap. We've come a long way in less than a year, but to pull this ambitious plan off, we need more validated, useful training data, as much as we can get our hands on. Our tokenized rewards program, on our way to a largely tokenized ecosystem, is designed to do exactly that. We've got a lot of work to do, but every timeline we've set for ourselves to solve a hard problem, we've beaten, and we're not slowing down. So that is pretty much it, except for one more thing. Oh yes, a few weeks ago, the world saw Apple Vision Pro. Press play. And although it'll take some time for most people to see, what was it playing? Many worlds overlapping, seamlessly connected, and creation at your fingertips, where you are in complete control. The Apple Vision Pro costs more than $3,500 and launched with only 6 immersive environments. Just 6. Think about the implications of that. It's a future we saw coming, and it's what Blockade Games is built for. So if you've seen any of the videos with Apple Vision Pro, you know you can go into full immersion environments and back out into reality. So this product is leading up to the ability you have that experience, immersive experience on demand that can also overlap with any geometric space, such as your living room. All right. That's it, guys. Thanks for me reading half of it. It's a new presentation, and I was not expecting to give this demo so quickly, but thank you. And Bufficorn Ventures invested in Blockade last February when we had just launched the 362D generator. And then since then, we've raised an additional 1.5 million, and we're preparing on the other side of GTC. We're an NVIDIA Inception Program participant, so around GTC, we're going to be bringing on new investment. So,
great. Thanks a lot, Marguerite, and we'll have to figure out how to do. I've never done presentations like that, so I wish I could have helped you more with the laptop.
I could have done a live. I could do a live demo. If
do you
guys want.
Do you want to?
I have it.
Do it.
It's not a
Yeah,
problem.
let's see it.
Okay, so this is an example of our web app. We have a web app and an API. API with a Unity SDK. But for the web app, what's really nice here, we have an enhanced prompt feature, which uses GPT-4. So if that uses our services best practices. So I'm going to say testing this service out. Make something beautiful. So it'll interpret my request here for what I'm asking for. Let's see, let's do render, It takes about 10 to 15 seconds for it to render a new image, which is pretty quick because these are 6K resolution images. And we actually are about to release an 8K resolution since 8K is the required resolution for Apple Vision Pro. So you'll see the prompt here created its prompt for what it thought would create a beautiful scene. Then I can take this and I can, when I go to download, launch 3D Mesh. So now you're looking at, this is a 3D scene. You can see the wireframe. This is a pretty dark image, but you can change the density. Well, this is kind of fun. You can see how like this epic mesh, you can get really, really fine points that you can't even see the mesh. But the objects all have 3D information. So where we are right now is still projecting the 3D information from that central location. But the next big releases we have are what we call mesh complete, which means that the rest of the information, such as what's the other side of the tree look like. If you need that information, you'll be able to render it. And eventually that can be real-time generation. So yeah. That prompt, that could have looked better, but I think you get the idea. And the sketch feature toolbar was on the side. We have an edit mode coming out that's really exciting. The edit mode allows you to select, for example, the tree and replace it with a totem, or change the building of a house to a skyscraper within your scene. So being able to do that in the immersive 360 design space.
It was totally cool. I remember the first time I saw your demo last year when you did it for us. I was just like, what the heck is this? That's amazing. And so you talked about what you're doing with the Apple display, right? And what do you see, what do you see like a year, 2 years down the road, assuming that these things take off? Because, there's other tools that Google has put out, that Apple's put out, that haven't gone that well. But there's no doubt that the direction is the right direction, right? So where do you think Blockade fits in what is this new sort of mesh experience that combines a sort of metaverse sort of thing with reality? Like where do you see Blockade sitting?
So we've actually purposely stayed very niche focused on 360 immersive design space, which actually is still very complicated, especially if you're leveraging all of the generative AI capabilities of your creation process within that space. But what is the biggest frustration with users is their ability to control and optimize and iterate on the thing they're trying to create. So if you've ever used ChatGPT or any other generator, I'm sure you get to a point where you're like, oh my God, that is not the thing I'm looking for. And then you might take something that worked a little bit and you move on. But in a lot of cases, it's not highly, it doesn't have high utility for you, right, as output. So we are creating not only just the generative AI ML side, but also the user interface, the SDKs that are needed for utilizing the underlying technology. So for example, with Apple, even though there's like not a ton of users with them, they're going to have a cheaper version of this soon. And app developers are definitely designing for these immersive experiences right now and immersive apps. But what you'll find is that every single app within the Apple headset allows you to be in an environment. So there's going to be a lot more demand for customization that matches the user experience and setting of whatever they're doing. And then you can do things like audio reactive. You can have light that's reactive based on the environment. So there's a lot of I guess like granular areas for us to explore that will allow us to be the specialists in environments where other people are focusing more broad on various generation capabilities, I suppose. So we are the only environment generator, especially with 3D, that exists today.
Now, I don't know if you covered this quite as in depth, because I didn't get it at first. But your users really are typically game developers, right? Game platforms, and so when you think about, like, I think, and I'm saying this just so that people who are watching can understand that you're not saying that like Joe Schmo would be necessarily subscribed to using your API and do these things. That one of the things that Blockade, and correct me if I'm wrong, one of the things Blockade does is makes it so that these teams that are developing games can do them an order of magnitude more quickly and efficiently and inexpensively, right?
Well, that is definitely one of their major sectors, but actually, so we have 100,000 registered users, which is a lot, and only, what was it, like 1,800, 1,900 of those are paying users. So the goal is to actually convert all of those interested users into like this being a real need for them in order for their creative projects. So actually, we do think that immersive storytelling and immersive design, so designers will benefit from this tool, even if it's like we talked with the Amazon Studios, and so for something called previs, when you're starting concept out your scenes, they're really interested in how they could use this tool for that purpose. So it's a matter of like how best can we create environments, and then who's using that really does span from a casual mid-journey type user that's just curious all the way to the professional market. But we are targeting the professional market right now because those are the people that can build real products.
That's great. That's great. Do we have any other questions up here? No? Okay. Well, thank you very much. I will be coming right up there now. Wow. Let me see here. See, Marguerite, this is how I do the notes. Okay. So, hi, it's me again, Russell. And I did want to talk a little bit, take a little break from all the pitches and everything, and talk a little bit about, talk really to founders and to people who are interested in solving problems and driving innovation. I'm going to be talking more about this in a session, I think on Saturday, but I wanted to give sort of a really high-level intro to it. And hopefully, let's see if I can try one more thing to get it looking a little more right. Now let's just go with it. Screw it, we're going live. There we go. So it's all about how we innovate and why do we even need startups, and why are things so freaking hard for startups when you'd think that we're blazing a new territory. This shouldn't be that hard. There shouldn't be so many things built up and fighting us. And you'll note that I did use some, in the old days, you used to come up with your deck, and you worked with an artist to come up with pictures and everything that go along with it. So I just used Dolly to come up with images, and it was really interesting. You know how in dreams, if you like try to look at the clock, you try to read words, it looks like gibberish. Like, even though I gave it the words, it still came out like gibberish. It was really interesting how gibbered it was, but you'll see. So, all of us in our lives, we see all around us every day how much technology changes, how many things have had to happen before we could get to where we are, and how oftentimes we end up getting back to where we started, but in a different way. And technology keeps on going. You get this strange sort of cycle. And this was using sort of music as an example of it. I'm a big fan of Cory Doctorow, and he talks about this in a few of his different books and different talks. He also talks about enshittification, which I won't get into. But this, you can sort of follow the path of written music to played music to streaming music and all that kind of stuff. There are many, many business models that you can look at in this picture that were made and destroyed at subsequent steps. And so as a founder, like, that is what you're doing. You're trying to find a way either to fit into an existing technology or an existing method of doing business, or you are really changing things and really, really mixing things up. So if you look at sort of music disruption, you started off and you had composers, and the composers would write their music. You didn't really have great printing presses necessarily right away, and so they had to conduct, they had to either play themselves or they had to conduct the actual orchestra or group of musical providers, music creators that would actually let you listen to music, and you had to be there to listen to it. Then printed music came out, and the printing made it so anyone that could play an instrument could play it themselves, or they could hire somebody to play. And so the artists, the musicians themselves, became sort of these like tools that you would use to play music that was provided by the greats who made them. Then musical recordings came out, right? And so you could hear the music from the artist that you wanted, by the composer that you wanted, whenever you wanted. Now, when this happened, believe it or not, there were huge laws that had to change because the printed music publishers wanted to sue all the new nascent recording industry, people making records on wax, essentially, of music, right? And they were trying to stop them, right? And so there were regulations and laws that had to be passed to enable someone to actually make a recording and distribute it. And the royalties associated with that have been fluid over time. So then that happened, right? And then you had, this recording industry, then you had different platforms for distributing it when you went from records to tapes, finally to streaming, which totally blew it up with the Napster, the Napster changes that started there, down to now where everybody's listening to Spotify and the artists are getting, half a penny for every time someone listens to it. This disruption, every step of the way, was a new potential business model and a new business failure, right? And that's how you really should think about what you're trying to do with your company, right? And a lot of the companies that we have in BV, and the ones you've already seen, the ones you will see, are really focusing on that. How, what are the changes that bring things to the user or to the listener or to whoever it is, in a way that eliminates the middleman, makes it more efficient, makes it more pleasurable, changes the way we all can work together. So disruption is kind of neat. You've got this real disruption stuff, and then you've got the idea of pseudo disruption. And real disruption is something like when the radio came out and newspapers, or when television came out and the radio. Now, newspapers are still around, radio's still around, TV's still around, we have internet streaming, but those took a huge chunk out of the existing media in a really, really short time. They didn't go away, but they have had. And you normally see this talked about with the adoption cycle of different technologies. But what it is really a business model disruption. Cell phones were another thing. In the 70s and 80s in the United States, we're like, oh yeah, we have the best technology, the best phone system, best, broadcast television, all these different things. Pretty soon, the 80s and 90s, especially when you look at in Asia, they started deploying, mobile networks and mobile technologies that we were very hesitant to adopt in the United States. And the United States is arguably one that's been left behind because we were so strong in the old technology. Another business model that was killed, and those of you, as anyone remember MCI? So MCI was one of the first competitors to AT&T. They set up radio towers that would transmit wirelessly, and that was how they competed with AT&T, who had these lines. That was really, really innovative technology that they were doing. Of course, now they're gone. Then you look at things like pseudo disruption. And pseudo disruption happens largely because of some regulatory element or some business moat that's been created. So if you look at what Uber did, and they broke the taxi cartels in city after city, right? And I'm sure you've heard the stories about how taxi cabs used to have to buy the coin to register to drive around. There wasn't anything they were really changing about really anything other than maybe using a mobile app and doing some more real-time stuff. Uber merely made it so that you didn't have to go get a special licensing, and you didn't have to go go through this whole process to be able to drive a taxi cab. Essentially, you could turn your car into one. To the end user, it was about the same service, right? And maybe in the beginning it was a little superior. Now it's just the same crap. You're getting in somebody's car in the back and riding in it. So it was definitely disruptive. Any of the taxi cab companies are there. Anybody who held a coin or a license to be a cab in England or anything like that, their business model was upset in a huge way. Now, I think it's interesting. What is this Web3 and blockchain and crypto? Like, is crypto genuine or is crypto pseudo disruption? You can make arguments for both. I mean, money transfers, they're highly regulated. There's a big moat around it regulatory-wise. The SEC and really the power and the big minds in blockchain are always butting heads over it. Hester Pierce is going to be here. Tung Chan is going to be here talking about just those kinds of things as ETHDenver comes on. However, there's also, a disintermediation. You don't need to have a bank. Like I tell people all the time, say, oh, what exchange do you use? Like, well, I use exchanges as little as possible because I don't need an exchange. Like, to me, an exchange is just an on-ramp or off-ramp. We can do, peer-to-peer exchanges. That is both, I guess it's both genuine and pseudo disruption. We'll see in the next couple of years what really happens, but we will know for sure if the regulations don't change and the rest of the world changes and the United States doesn't, that maybe it was more pseudo disruption is what's holding back blockchain. So there are some different tools that all the competition for anybody who's starting up a startup has to deal with, these moats that are protecting them. And they really, really hamstring you. It's probably the hardest thing about being a founder is you can find your business problem, you can find your solution, you can even make a really useful, usable solution. However, when it gets down to actually implementing it and going up against the competition, there are these moats, these steering trends. So you get like the Googles, the Apples, they have so much control, they can sway what everyone is talking about. So Apple wants us to learn about their new visual display. What's it called? For some reason I got it. What is it, Mark? Vision Pro, right. So Apple Vision Pro. Everybody wants to talk about that. They're not talking about anything else. That they might be, the fact that OS X is getting crappier and crappier every year, or that iOS can no longer have a connection that doesn't get lost when you walk 10 feet or something like that. Those aren't necessarily true, but they can distract you from real business opportunities for your company and push you into one that they have control over, that they can put you into their system with their moat, with their access. You've got resource control. That can be information. That can be the data, like Facebook, Twitter, they have information about you that they resell because you are the product. YouTube, they control all that, so they basically, if anyone wants to play and communicate with the people that they have to go through them in the channels that they've identified. You've got regulatory manipulation. So the big players are putting up blockers to make it so small players can't. In the payment card industry, like credit cards, debit cards, there are things called the Payment Card Industry Digital Security Standards. You may have RFPs that go out for services that require you to have 3 years of contracts that show that you have this clearance. Well, if you're a new company, you can't have that at all, right? So there's a lot of things regulatory-wise that they can do to stop you. And then the worst thing, and Microsoft was infamously doing this, and it came out, I think, a book, Microsurfs, which was they just acquire their competition. They acquire them and put them out, and then they bury it. I mean, any of you who used Mint, the service that was bought by Intuit, Mint was a great service put together. You could manage your own finances, and it is being sunset, and there's nothing to replace it. I would argue that there were probably 50 great wallets for doing crypto 4 years ago, and now there's hardly any, and almost none of them can you actually import from a printed out QR coded key. So anyway, that's just a personal problem. But there are all sorts of ways that they are stifling disruptors, and you have to walk this gauntlet as a founder and figure out like what kind of startup you want to be. Now, I'm not going to talk about this stuff because this is all what as a society we can do, and we can talk about that some other time. But I do want like everybody to think about like how are you disrupting, and what kind of a founder, what kind of a company do you want? Do you want to do genuine or pseudo disruption? Which one do you have to do, right? Are you trying to do something that you can establish change really quickly, or is it something that this is going to be a slow roll of a change? Are you doing this for the progress of society, or are you doing this merely for money? Are you doing it in sort of a regenerative way that's going to be helping a larger community, or are you just going to be helping a small group of people or just yourself? Like I said, this is a real quick preview to some of the stuff I'm going to be talking about in a different talk, but I did think it was really important to frame it that way. So let's stop there and get back to where we really should be. So any of the founders that we've got, if you guys want to come up here, we're going to do some question and answers with you guys. There's 3 seats. So who wants? They're going fast. These are my founders, my BV folks. I didn't tell anyone I was going to do this, so.
Were you founder? Yeah. You should go there. I already went up. Oh, you did? Okay.
And they haven't even seen you yet, so have a seat.
Thank you.
Sure. Oh, you booted Marguerite, you guys. That's not very nice. No, go ahead. So I don't know if any of you out there have questions. If you do, raise your hand. We've got a mic, so you can ask. But I'm really interested. So actually, this is a good mix of people that we have. Why don't you first introduce yourselves again? Actually, especially Adam, because we haven't talked to you. So you want to start?
All right. So my name is Adam Zasada. I represent today here Olympics, a company which is a Web3 game development studio. But I'm also the founder and CEO of 0x KYC backed by Bufficorn. We won the pitch tank last year. We had an incredible story. We learned a lot about the regulations in the crypto space, and after over a year and a half of researching this topic.
Don't tell them all your stuff. You're going to tell them your pitch too. So
all right, but yeah.
Don't tell them your whole story.
Yeah, so I guess that's it. You know. But what I want to say is like what we realized, after a year and a half is that being an expert in crypto regulations means being aware of the lack of clarity.
For sure.
Yeah.
Hey, JJ from Smart Funds, and we're the real-world asset tokenization platform and alternative investing.
Brett Stewart from Split Social. We're flipping the script from an ad-based, the consumer is the product, to a subscription-based community of creators.
Great. So here's the first question I want to ask you, and this is one that everyone who's ever been a founder, not everyone, but I guess 99%, really have to deal with is money, right? Money, when it comes in, seems like it's never going to stop, and as soon as it does stop, it just evaporates really much, much faster than you ever expected. And my first question would be, what is one thing that you spent money on in your first 3 to 6 months that if you could take it all back, you like, this is the one thing that would make a difference to you that you would have changed?
Product.
Can you expand on that?
Well, if I could do it again, we raised last year, right? We were trying to raise. So last year was quite tough. For crypto, I mean, you're probably a scam or a fraud. Plus, all the cold wallet VCs had their money in FTX. So, and also interest rates, etc. So what I mean by this is I would focus, the funds that I had to build a funnel for onboarding of people to whitelist them for my project and show it to my investors. Look, I got 10,000 people waiting for nothing. Of course, I would phrase it differently. Rather than I would have built everything and then be like, oh, but you have no traction, So that was it.
So so it is that you put all that into having all these people whitelisted and knowing that they were there, only and to find out that really didn't help you.
I had the 2021 playbook where you build a proof of concept, get an MVP, get some partners. We partnered with one of the biggest companies in the identity space. We also launched with a product with Henkel protocol, so you can privately. That I'll talk in my presentation, but basically we had some clients, proof of concept successful, not enough for investors.
Okay, makes sense. JJ,
So unquestionably, the amount of money wasted on legal work. When I first met Russell and showed him what we were working on, we were also working on.
It was MCon, right?
Yes, correct. Yeah. We were working on a different version of the product that was related to open-ended vehicles and hedge funds. And so we built an MVP for that, and a little bit too early to market, but also all sorts of compliance headaches. But in order to just build an MVP, right, there's still an incredible amount of legal work that needs to be done just to have an MVP that's compliant. So the compliance costs in this space are a pretty significant barrier to entry.
I would agree with the product statement. I think we were really ambitious with our product development, and we just wanted to provide a lot of value and get it to market and start working right away. I think in the modern world, there's a lot of low-code solutions along with a service offering that can get you more traction early on to get early investors more interested.
So, Marguerite, I don't know if you'd be interested in answering this question because you're up there, but they have a mic. Would you mind? Can you answer the question was like, if you could go back in your first, like, for you, you've been doing this for a little longer, like your first maybe year, what would you not spend money on? Margaret's being asked questions by multiple people now. Oh, here, no, she's coming down, so it's okay. Sorry I was like, it's silly not to have you up here. Oh, here.
So one thing I would do differently over the course, so Blockade started as a game studio a Web3 game studio back in January 2018, right when NFTs were getting traction. I had been a creative in the Bitcoin space since 2014, worked with Bitcoin in creative ways for art. So I was very green when I started. I think for me, some of the biggest challenges were having done smaller, successful projects with a lower burn before really ramping up into doing the more ambitious projects, but being more slow and methodical in building up the revenues and being self-sufficient, being sustainable, and then taking investment to put that into a model that's proven that works. And now I'm just accelerating my sales funnel and targeted marketing and things like that. So I think that working in innovative technology, it's really easy to get excited and jump the gun and take a bunch of money early, and then work. And then it's just very hard to, for example, building Web3 games. The technology of the blockchain underneath you is still constantly being iterated, and then you're trying to build a game application on top, which is already a really hard challenge. So by the time you bring this to the market, there's a good chance you're going to be completely outdated in how you're operating. That's probably true for a lot of other application developers and how they're thinking about their UX and the product and the experience, and then also the functionality of how they're leveraging decentralized technologies. So sorry if that was too long.
That was great. So, so another thing that comes up is sort of determining who your customer really is and who you're developing your company for, and identifying your users. And I know for me and a couple of different startups that I've been in, and certainly many that I've seen, is that this changes. You have to do pivots quite often. Maybe if not about users, maybe if each of you could recognize like a pivot that you felt was critical, and whether it was super impactful to the business or not, and also how it affected you and sort of what you thought about the company. Why don't you start with that, JJ?
Sure. So as I mentioned, we our SPV and real world asset direction is a pivot, a somewhat of a pivot, as we had started as back office infrastructure for on-chain hedge funds. And when we started with that product, we thought that our first customers were all going to be the degens, right? The degens who understood how to use, for lack of a better word, on-chain financial services, and that these, the degens would be the hedge fund CIOs of the future. Now, we still think that's probably going to happen, but not for at least a couple more years. So, there was both compliance issues that were not necessarily our fault, but the regulatory agencies haven't been playing necessarily that fair. So they had thrown a couple of extra roadblocks in the way. So between that and the timing, that's what helped us kind of shift a little bit to the real world asset stuff, for which the timing is now great. So a well-timed pivot can always go well.
Yeah, so when we first launched our product, we assumed that our target audience was YouTubers, people that were using tools like Patreon and Uscreen. We thought that they were frustrated with YouTube and that they needed something like our platform to succeed. We spent a lot of time talking to these creators, hearing from them that they wanted to be paid more, but they weren't ready to make the switch, and we realized that they actually really enjoy YouTube. It took us a while to realize that there's an entire audience of creators, or an entire group of creators that are left behind by social media. Social media really rewards very frequent posting, lower quality content, and there's an entire group of creators that have been to film school. They've apprenticed under top filmmakers, and they want to make art, and they want to get into storytelling, and they're left behind by the current system. So once we discovered that, we have had a lot more luck talking to creators and have found a lot more people that are interested in our product.
I'm skipping this one.
Yeah. For us, as a Web3 game studio, we had raised capital in 2021, about $5 million to build a cyberpunk RPG. And then as we're developing, this is a multi-year development project, I come into passing with an old friend of mine who's built an AI company. and it's akin to Midjourney in various ways, but with a lot more user controls. The platform hasn't really taken off, and he was wanting my advice and also help in fundraising. But as I was working with this platform, I started to be able to make our own game characters. So all of this game was 2D, but all of the game characters on demand. And I realized, I mean, this content creation for games and scalable content is one of the most expensive problems. And it had taken us multiple cycles generally to get content, get it rigged up, do Q&A, do tweakings, and then finally be able to take it to market and product. So if you could just have faucets of content that was designed around your specifications that could be generated in real time, this would be huge, especially for Web3 developers, where content and like that part of it is really, really difficult, and especially if you have neat ideas and you want to move iteratively. So I made the decision back in 2022 to acquire this ML team. And very high risk at the time, 2022, like Midjourney had just hit the market. It was yet to be seen how big generative AI was going to be, how defensible it was if you could build a product that could be monetized. Instead of continuing work on the game, we decided to think about what would the largest problem we could go after and the fastest to market that we could do. And with our skill sets with this team, doing large resolution images in 360 was something we launched within 2 months of the acquisition. And then from there, being able to monetize. So like, it was the goal of still though wanting to create games is still there, but understanding that how we make games has fundamentally changed and will continue to change, that to spend your money in participating in that development process, and then hopefully in the future being able to utilize those technologies.
Great, so we had you two basically decided that your story to your users and the users that you were targeting was a little inconsistent, and you actually decided that once you started building what you needed to do the tool that you were actually supposed to be building, that there was more value in templateizing that and making it something that more people could leverage.
Yep.
So that's really important information. Are there any questions up there? I've got more, but if there's any other ones, I don't want to skip you guys. No, okay. So as far as recruiting, this is a really, really hard thing for all startups. And when you have very limited resources, what would you tell to another startup, starting today, about the team that you need to get you through to the next phase? Do you want to start with that one?
Sure. So my project started as a hackathon project. So the original team was kind of organic, although not everybody joined. Jeremy from our original team is here. Shout out, Jeremy. Altan, who was the only one who didn't join our corporation, even though he initially wanted to, but we were delayed too much with the documents and so on. He's presenting at NEAR today as one of the NEAR people, leading the pack. Regarding other top talent that we hired a 10x engineer who was the only person who worked more than me in a co-working space in Bali. And there would be no way that a startup like ours would be able to hire him for, equity and for very little payroll if we hadn't met in person and just bonded as friends, So these personal connections, I think, are very important, and word of mouth, because you really compete with huge companies out there, and unless you do exactly what somebody wanted to do, you're really, competing against bigger players, I'd say.
So I would say even retaining the talent. So like for us in acquiring the ML team, in all of my projects, it's always been, oh, you and I together could do this thing, and that thing would be amazing. And so it's always been collaborative as far as the talent coming together. But then I would say the retaining the talent is another tricky part, because especially in the AI space, your top ML engineers are being hunted down by these major players like Stability and other folks who have endless pockets of being able to acquire them. So for us, it's got to be something that's fueled with passion and customers that really you're solving a pain point, that there's so much appreciation coming back to the team that it creates this feedback loop in which people want to stay on the passion project even if they're making less.
Yeah, we've had very limited financial resources. So for us, building a team has been about passion. It's been about finding people that see the vision, that believe in what we're building, also believe in the space and care about the space. We're very early stage, so I can't really comment too much more on that.
Sure. So I think, as we've all sort of talked about, having to pivot, where we are in Web3 is still very early in the maturity of the technology platform. So finding product market fit has been a challenge for, pretty much everyone in the space. And so you almost have to expect some pivots along the way. And so from that perspective, I think it's really important for, the core founding team, even more so than complementary skill sets, people that you want to be in the foxhole with, because pivoting, and I know we all just lived through the bear market, which I'm officially putting in the rearview mirror, but capital was pretty much unavailable to all of us during that time, and pivoting during that time. None of that's fun, right? Like to be in those kind of environments where you're having to figure things out and capital's not available. And so you need people you want to be in the foxhole with, who obviously also have complementary skill sets. So, if you don't have that kind of personal compatibility, then, you're not going to survive the kind of messiness that comes with the earliest stages of trying to find product market fit in Web3. And then, the other thing that's very unique about Web3 is the accessibility of talent at a place like this, right? So, just going here and not necessarily recruiting, but, you go and you work on a hackathon project and you spend a week building with people, and, there isn't a better kind of interview / trial process / can I work with this person? So I think, the big hackathons, ETHDenver in particular, is a fabulous place to find team members.
Okay, this is the last question, and this one's horribly self-serving, so I apologize. I would love for any of you to give a 20-second soundbite that you really want of yourself saying on camera here, so that you can use it for whatever purpose you want. So, we'll give you 10 seconds to think, and then you can come up with the coolest thing ever that's going to get cast all over the world and tweeted and everything. So,
All right, so since I'm here with the Olympics protocol, I'm responsible for growth. We are organizing awesome compete to earn tournaments in our game Clash of Orbs. And you should go to olympics.cc to learn more about that. And we are basically creating a new sustainable Web3 gaming economics model where you compete to earn, so you're really rewarded for winning, for your skills, not in the typical play to earn scenario, so to speak.
So the hard shell, he goes with the hard shell. Okay, that's fair. That's fair. Who wants to go next?
Smart Fund simplifies tokenization for off-chain securities.
There we go. You can skip if you want.
I think that we're at a very difficult time in our society, and content and social networks are increasingly polarizing. But I'm optimistic for the future, and I believe that we shape our reality with what we put in our minds. And in order to change our reality, we need to start thinking differently and free our minds.
As a creative, I am very excited to see where we take generative AI and these other emergent technologies to see and unlock creativity at a broad scale around the world, and what people will make quickly and cheaply, iteratively. I'm excited that Blockade Labs has participated in the world building side of this, but where those dreams and where we can push those boundaries is still completely open ocean at the moment. And I think it's a very exciting time for the creatives in humanity.
Thank you all. And I will say this, as I'm a chief of staff for Sporkdown for ETHDenver. And I can tell you that we all are working really hard to make ETHDenver the best event ever. As the investment steward of Bufficorn Ventures, I really believe in the companies, the portfolio companies that we have. And I think that we are on the precipice of an amazing time. I know you hear lots of people talk about the flippening and this or that valuation of some crypto, and I would say if you're looking at it that way, you might be looking at it the wrong way. You should be looking at it at what will the Web3 economy, in however it ends up turning out, what will that bring? How will that grow? You think about it this way: gold, platinum, silver, they're all out there and you can mine them and they're worth it for jewelry, but where they're really worth it is putting it in components, making other things, in the production that happens and the value that you add to the rest of the world and the products that come out of it and the services that it can provide. We are now, technology has gotten to the point where there's no reason for Web3 not to eat the payments and banking infrastructure's lunch. There's no reason for us to have any ticketing platform that isn't on blockchain. There's no all of the different technologies we're talking about, why do we have any registries at all that are on our blockchain? It is time for us to come out and show the rest of the world what blockchain can do. So if you're working on applications, work on applications that mean something for people, because that's where we are now. Blockchain is at the technological level where we can make things that make the world a better place. Thank you for coming, and stay watching Bufficorn Ventures, Bufficorn V on Twitter, and look for all these companies. Thanks. Next we have you coming up to talk, right? Okay. So give him just a second. We'll set up, and these guys will get off, and we'll give Adam his chance to tell you about what happened with OXKYC. Sure.
Thank you.
So Adam's going to come back up, and some of the things he was trying not to tell you, he will tell you. And some of the things he won't tell you at all. There we go.
I got the new slides.
You got? Let me get that laptop under here.
Sorry. I need to get the stickers like you have.
Oh, you got loads of them. How are we on video? He's setting you up. We're good. Yep. Here you go. Have fun.
Thank you. Fantastic. Hi, everyone. My name is Adam Zasada, and I represent 0xKYC. Last year, Jeremy here was pitching at the pitch tank, and we won the competition. And I'm going to give you a brief history of my journey as a founder, our journey as a company, and what's next for us and for the broader Web3 space in general, especially considering Web3 gaming. So currently, you can use us as Web3 marketing tool for Discord and in the future Telegram. But I'm going to go back to the start where we started. So we started as a hackathon project during ETH Warsaw, and we've built on-chain, privacy-preserving KYC verification for sanctions. So we verify your KYC profile using Onfido, who is our official partner, and we put an on-chain attestation that this wallet is not sanctioned without revealing the name and surname. So currently, you can use this with Henkel protocol to privately yield farm on Curve, Beefy Finance, and as of this week, you can also do private Lido staking using our on-chain attestations. This solves the privacy pool problem where you are shielded from bad actors, so to speak, and you can become somewhat compliant. The big problem with that was that this solution is not fully compliant because full compliance requires the actual name and surname. So the concept is a little bit self-defeating because our target market is probably smaller than the investment we raised so far. But here's a next level of the journey that we envisioned before as like a decentralized identity protocol. And we've worked with the biggest industry on-ramps and off-ramps in the world on these designs. Digital Identity Foundation, Polygon ID, many more. We got all the designs for the actual implementation. So imagine you're an on-ramp and you're able to provide credentials to our decentralized storage, which is accepted by another vendor. Let's say this is MoonPay. Let's say this is Ramp Network. Then they could talk to each other and profit share on the reusable KYC credentials at users' permission. So this is like a future protocol that can be also used to gamify communities on Discord. It's quite complicated, but long story short, we are just providing a reusable identity solution. But we've never managed to actually build it because it's super difficult to get past the kind of gatekeeping of these big companies, which are amazing and are happy to talk about it. But since there is lack of regulatory clarity, we've had, I mean, these things take time. This will probably take years to actually become a reality, even though technically it's possible already today. And one of the companies, SamSub, is doing like a C5 version of it right now with reusable credentials within 4 Web3 companies. Moving on, since this was kind of a flop in terms of, I mean, we've created a product, but we were like, okay, sanctions, but not enough clients. Maybe we can get 20, 30K revenues. That's not enough to raise money. So we went like, what's the biggest trend in Web3 right now? Where we have the biggest amount of users since we earn money on a per user basis? And we're like, Web3 gaming. Everybody's saying Web3 gaming is going to be the next big thing. Here you have, 100 million gamers in the next 2 years. That's probably a year and a half from now. You have a couple million daily active wallets in total. Depends how you calculate it. So we thought, okay, there's a lot of bots and duplicate accounts farming rewards, farming these games. Let's use our facial biometrics system to shield users from these bots and duplicate accounts. We've created an on-chain uniqueness verification protocol as well as API for verification of uniqueness on the basis of facial biometrics, used by a Web3 game studio called Insert Stonks, as well as it's possible to use it for Galaxia Studios, a Web3 game studio Discord, because we realized we can also gamify this and use these facial biometrics on Discord. So we found a new problem. There's over 25 million daily active users on Discord, 4 million are bots and spam, 6 million are multi-accounting, and everybody's tired of doing CAPTCHAs and all sorts of verifications all the time. So we're like, verify yourself once, show your face, and you're done. But this was a problem because community moderators weren't really happy with talking to customers to tell them that, hey, you have to go to this external website to verify your facial biometrics. This is why we pivoted yet again, changed the name to Sunscreen because KYC triggers some people on Discord, as you can imagine, and decided that maybe instead of, and this has been only validated with the founders of Sandbox for now, that they would be happy to use it. So to use instead of a face, we'd use device fingerprinting, which you can do natively within Discord or within Telegram. That would mean one user, one device, so you could still farm rewards if you have more devices. But it's an incremental step. But this is more of an idea for a feature rather than a whole company, I believe. But this is where we came at, and this is where we're currently at, actually. Oops, did I break something? Or maybe I'm just going to skip this slide. Oh, well, we had some competition for Sunscreen. There's Bot Basher. But their solution by Humanoid, their solution is pretty good, but it's $1 per user. That's really quite a lot. And WorldCoin is obviously trying to scan us all. We want to scan us all as well, but we want to start with the devices. You could plug into Gitcoin Passport, and we can start competing with them, but we need like $1 million at least to get it started. We've gathered a huge team. Shout out MG, Dylan, Jeremy, and the rest of the pack. We are currently profitable, but that's not because we sell anything to our customers. That's just because we became small software house. Or actually, 2 of our employees are working for our friends / partners. I've recently joined, that's why I'm here, Olympics, a Web3 game compete to earn protocol, which we are, if we will be able to deliver on our promise of the device fingerprint for creation of unique invites for the Discord server, we'll be able to use this straight away at Olympics, where I'm responsible for growth, to actually build fair giveaway in gaming competitions to grow the community organically without people farming rewards, and with 100% certainty and incredible user experience for getting real people onto your server fast. So this is our goal. We raised so far 200K from Outlier Ventures, Bufficorn, and angel investors, including the Celestia CTO. I already talked about Henko, and here is like a slide which technically describes our zero-knowledge proof. And I still have a lot of time, but one thing I'll add is that, so these on-chain attestations, they're quite useful for a lot of things. They can be also used for example, indicating that there is a full KYC profile available for a given user. So I can talk a long time about MiCA regulations, for example, in this aspect. MiCA requires. So what's the big problem with these big on-ramps? Why aren't they jumping on it if this streamlines the KYC process for them? Because they could potentially use the KYC profile of someone who already used MoonPay to someone who already used Ramp and profit, pay for the KYC, but still less than doing it all over again, as well as. Well, what's the problem? Why aren't they doing it? And it's regulatory uncertainty. So right now, MiCA regulation in combination with AML-D5, as well as the travel rule, requires transfers to be verified over 1,000 euros for incoming and outgoing transactions within European Union. What this means is that basically, if you send 1,000 euros to a MetaMask wallet, or you receive 1,000 euros from a MetaMask type wallet, self-hosted wallet, any kind of wallet, you have to KYC the originator, which is kind of crazy. How would you, so you receive 1,000 euros from someone, and the virtual asset service provider has to freeze these funds until they verify themselves with a KYC. Similar thing is happening in the US with the regulation for incoming transactions over 10,000 US dollars that you have to KYC it at source. So how do you go about it? Well, basically, it's really difficult to enforce it, and there is a big question mark when I talk to CEOs of these biggest on-ramps, multi-million-dollar companies. They say, we've seen a lot of compliance issues and compliance thresholds that were enforced and never really came to fruition, because how will the European Union, for example, verify that this MetaMask wallet is not within the European Union, or that you will claim that you're not sending this to yourself, and blah, blah, blah. So the space thinks this is kind of not true, that these regulations will actually be enforced. So it's also not really actionable from our standpoint. And from investor standpoint, the space of decentralized ID is also very crowded, because I'm sure you've already heard about a couple of projects in the space. Nobody, almost nobody, was really thinking about it like we did on this slide where I showed the reusable KYC credentials, which we believe is the best design in the world right now. And some industry leaders would agree, but it's not really actionable right now. So this is the design that will become a billion-dollar company in a couple of years, but for now it's in a freeze mode until we find better times, or until we get the viral marketing tool going on with Olympics. Thank you very much, and I guess I got 10 more minutes for Q&A. Thank you, Russell. And big shout out to Bufficorn Ventures, big shout out to Michał from Olympics, the CEO. Without him, I wouldn't be here today. Without Russell, same thing.
So I wanted to come up here and ask a couple questions too. Are there any questions up there that we have? I don't think, if there are any pop up, then just the mic is over there. Because one of the things that I really loved about OXKYC was I ran the My Colorado program in the state of Colorado, so I was the director of digital transformation here. And we came out with the first state-sponsored, DMV-sponsored digital ID. And I have a lot of, like you talking about regulations and uncertainty, like, it's hard for people to understand how much that can affect you. So just imagine that you have like the blessing from the DMV, from the governor of a state, that a digital ID is good, right? You can use it, it's legal, the whole thing. And yet, we had to create training programs for all the grocery stores so that their training people would do it. We still, to this day, I think, could never convince Whole Foods that we weren't scamming them with the thing, just because lawyers typically are not paid to be liberal in how they interpret things. They're trying to keep you safe. So Regulatory-wise, this is a great example of there's this moat. And you could, because originally you talked about KYC, which is why KYC, which is know your customer, in case you don't know. We're all in crypto, we know that. And it's a little different. There's different types of KYC that you have to have. And the idea of having a tokenization of that proof is brilliant, and it makes intuitive sense to everyone that understands it. But 15 years ago, there were lots of states in the United States that didn't accept digital signatures so that you could do an electronic form. Like DocuSign wasn't around then, or it wasn't accepted everywhere. And like, this is exactly, you said this could be a $2 million thing, or $2 billion thing. Yeah, 2 million. $2 billion thing. But regulatory-wise, they're not willing to do it. When you look at a KYC process for a bank, it can cost them $50, $80 per person. You can have a process that does it for $8 or $9. That's a huge opportunity for disruption. So a couple of things I wanted to ask. There were a couple of different iterations you went to. You started off with the KYC, which I think was capital KYC. It was for financial transactions and everything, right? Then you went to liveness to make sure that someone was and like duplicating, that you weren't a duplicate of yourself. Mainly for like online communities and stuff like that. They were already there, right?
Web3 gaming mostly.
Web3 gaming. So I think it's interesting that you're going to Olympics, because the biggest opportunity for all of this, in my opinion, is gambling. As gambling gets more and more legal. Can you speak a little bit to sort of what you think, at least the opportunity is in the gaming space for this kind of a solution in the near future?
Okay, so imagine like did you ever play poker for like big stakes, high stakes, or anything like this? But you can feel the thrill of money gambling. All right, so essentially with Olympics is what we want to bring to the Web3 gaming community is the thrill, the dopamine rush of actually being able to play for stakes. So Olympics created something called the trust, which is a mechanism where you lock into a smart contract money that you're sure that the person you're winning against won't quit and just leave when they feel like they're going to lose. And plus, the company is already operational for 4 years, and they built a whole stack of Unity and other plugins that are able to. You can essentially just run your game really easily, really quickly on top of Olympics and add the Web3 capabilities in order to compete to earn. So I think that relates to your question. Did I answer it completely, or would you want me to add anything?
Well, I mean, I'd say, like, with all the online gambling that's out there, and more gaming that's coming out, and even here, like in Colorado, we did the Game Jam 3 or 4 years ago. We were trying to use like oracles to do on-chain, non-skill-based gaming, which still would need like some sort of identifying aspect. How close do you think the gaming industry is at a much larger level, not just like online gaming, but across the board, to accepting a digitally proved identity?
I mean, all games that are bigger have some sort of identifier for each player. It's very vague, and it's sometimes really bad. For example, Sandbox never really had a problem with people cheating, because the game is kind of like a sandbox, as the name suggests. I mean, pun unintended. But when I talk to them and they see one device, one user, they're excited. They are not so excited when they see they have to go to an external page. But if we could do it seamlessly with the protocol that we have a design for, well, then you at least can map users to devices. Later, you can map it to addresses. This is the double-edged sword of Web3, that unless you have fully homomorphic encryption or basically some kind of private ZK chains, all of your transactions on chain. That's good really for rewards and showing NFTs that you get as rewards for games and so on and so forth. You can combine this into a profile, connect it to your ENS, Gitcoin passport, and the device fingerprint. We could be the device fingerprint part of it. You can now also connect your WorldCoin account, which is kind of the maxi version of what we tried to build. And for some time, we tried to be, a competitor, so to speak, even. But I guess that answers completely right now. So we can just add one small brick to the wall, but in a good sense, like Pink Floyd. Okay.
Okay. Any other questions up there? Okay. Thanks a lot. Really appreciate it. Okay, next up is Open Dollar. Yes, thank you. I always mess up his name. Joseph, is it Chiarizzi? Pretty close. I should know. I'm Italian too. I should know how to say his name, but I don't. But Joseph has been involved in the Sporked Out ETH Denver community for a long time. Oh, and he made the first Sporked Out proposal. He also, he and his team have been like doing amazing work over at Camp Biddle. We're taking people from 0 to 1 on getting them up and ready for a career in Web3 development, among other things. And just about every community that's doing good things or trying to do good things, Joseph has some sort of part of, I think. You see him on Twitter as Cup of Joseph, I think, and I'll just hand it off to you. Enjoy and knock everybody's socks off.
Thank you, Russell. Wow, incredible audience today. Thank you so much, everybody, for coming out. Yeah, I'm Joseph Chiarizzi. I'm one of the co-founders of Open Dollar, and we are building a new decentralized, over-collateralized stablecoin on Arbitrum that is more flexible, powerful, and safer than any other stablecoin that exists. So the problem that we're trying to solve is DeFi lending is still very inflexible today, and there's a lot of downsides to that. Debt is tied to accounts, right? Why is that such a big weakness? You would never take out a 30-year mortgage on a house if you couldn't sell the house until your loan was paid back, right? But that's exactly how lending works in DeFi right now. You deposit collateral, you can take out a loan, but you can never access your capital, you can never access your collateral until your loans are paid back on Aave, on Compound, Maker, every lending protocol in DeFi. Which means that there's no secondary loan markets because those loans are tied to accounts. And if you want to close out or get out of a position, you always have to find capital to do so. And redemptions for stablecoins are involuntary or non-existent. With stablecoin protocols like Liquidity, you can redeem your stablecoin against collateral and unlock it, but you can do it against other people's vaults without their consent. And it has been a really great safety measure for Liquidity, but it means that their protocol hasn't grown as fast as it could, and it's not as scalable for the type of lending that we want to bring to the rest of the world. So our solution for Open Dollar is we've created a new DeFi primitive called NFVs, non-fungible vaults. A non-fungible vault is a debt position. It has collateral inside of it, and it also has debt minted against it. So every time you open a CDP with Open Dollar, you get an NFV. You get to deposit liquid stake tokens like Lido ETH or Rocket Pool ETH, and you get to borrow the OD Open Dollar stablecoin against it. When you want to get out of that position, you don't have to pay back your debt. You can sell the entire position as an NFT on any kind of marketplace. And if you're holding the stablecoin and you want to get out of it and into the underlying collateral that is backing it, you can do so by buying somebody else's vault on the marketplace. When USDC depegged last spring, you don't get to call up Circle and call them at 2 a.m. on a Saturday and say, hey guys, send me one of those treasury bills that's backing your stablecoin. They don't do that, right? They don't have redemptions. They don't have a way for you to get in and out of those positions. And actually creating a way for people to redeem their stablecoin for the underlying makes it much safer. So I think we can actually build stablecoins that are safer in DeFi than with traditional financial rails, and just make DeFi safer overall. So OD, that's the over-collateralized LST-backed stablecoin. Will be launched on Arbitrum first, and we are planning to launch in the next few weeks. So OD will always be over-collateralized, which means that it's always fully backed by more than 100% of the value in the tokens behind it. So no Ponzi-nomics. So how does Open Dollar make money? we get a 2% or slightly less stability fee on the OD that people borrow from us. If there are liquidations, if the value of your collateral goes down, your position is liquidated, and we can earn additional fees on liquidation penalties. I think there are other stablecoins that want to pass the yield from collateral on to the stablecoin holders. And this is a real mistake because the people who are minting the new stablecoin, who are adding TVL and providing the most value to the protocol are the people actively managing safes. So 100% of the yield deposited in LSTs into OpenDollar goes to the depositors. We don't take any cut on that. So the market size that we're trying to address here is actually, I think, really interesting. In the US, the secondary loan market is $3 trillion a year, trillion with a T. And in DeFi, it's currently $0. Right? There are no secondary loan marketplaces in DeFi. And if there are, come see me because I'd really like to learn more. But I haven't seen anything because in every lending protocol that has come about in DeFi so far, we've always tied debt to accounts, and it doesn't have to be that way. So we can bring the feature set of DeFi lending up to traditional finance and start and make a lot of sense to traditional financial funds who are doing tons of volume in secondary loans and doing interest rate swaps and all of these kinds of financial primitives that exist in the traditional markets but don't exist in DeFi today. So we can start to tackle that. And the stablecoin market size is currently about 150 billion. I think that is going to grow exponentially as the demand for stablecoins is very closely linked to the demand for the collateral backing them, right? And so as there's an exponential increase in demand for LSTs, and there's more, he's not pointing at me, okay. As there's an exponential increase in demand for LSTs and the LST market size rises, we're going to meet this demand for leverage on those assets. So there is a lot of competition. There's a lot of other stablecoins out there. And there's a lot of different breakdowns and trade-offs that you get with every one of them. We've been hugely inspired by Liquidity, hugely inspired by Maker and Aave and other successful lending protocols. And we've taken the best of Maker's really powerful liquidation engine. We've taken the best of Liquidity's redemption module that lets people get out of the stablecoin and makes it safer. And we've taken all that inspiration and put it into the next generation of stablecoins, which is OpenDollar, and added our non-fungible vaults on top of it. So our own new financial DeFi primitive, our own new financial primitive for NFVs, and really trying to take the best of what exists now and then iterate on it and really bring DeFi up a level and match the feature set of traditional finance. So a little bit about our team. I'm Joseph, as I said before. Before starting OpenDollar, I was working at OpenSea and helped build the marketplace seaport behind OpenSea. So slightly more than 1% of all Ethereum transactions use smart contracts that I've written or contributed to. Before that, I was the first DevRel hired at Gitcoin, and I was a lead blockchain engineer at Airbus. My CTO, Patrick, worked at Superfluid and was the first employee or early employee at several other DeFi startups that have been successful. We just added Ivan to our team recently, who was a BD lead at Lido and is really helping with our go-to-market, working with lots of large hedge funds, family offices, and people holding a lot of Lido ETH who are looking for additional financial services on top of that. So I'm very excited to announce that this is the first time I'm announcing this publicly, we are officially raising another funding round, another seed round for OpenDollar to help us scale and bring non-fungible vaults to DeFi and bring a secondary loans to the masses and really scale our operations. We raised the pre-seed round led by Skycatcher and supported by Buffycorn Ventures, so thanks for having us here today. And we also have Tom Preston Warner, who's one of the co-founders of GitHub, as one of our advisors. and several other investment DAOs and syndicates. It's really cool because actually the majority of our investors are not traditional VCs, they're investment DAOs or syndicates of more people. So the open dollar cap table is really stacked with a lot of really smart people who believe in us and believe in DeFi, which is really exciting. We've done one audit so far with Code Arena. We posted a $35,000 bounty challenge on Code Arena and had hundreds of people contribute to the security of Open Dollar. And we're finalizing one more audit with QuantStamp. That will be the report for that will be published in the next week or two, and then we'll be ready to go live and raise more funding to scale Open Dollar. So that's about us. Open Dollar is the most flexible stablecoin protocol. And yeah, thank you for your time, everybody. I think Russell's going to come up and do some.
Oh no,
some
we're going to
QA.
ask questions.
Oh.
You haven't been here to see this.
Excellent.
So you were an event. So I like to be up here and to ask questions because it's more fun up here. So, you know, you and I were talking like last week about this a little bit. Why
Yes.
do you think that that really the community is like seemingly satisfied with the way that borrowing works on blockchain with Web3? Like, why has this been tolerated so long? It seems like your solution that you're coming up with is one that like is clearly something that is desperately needed.
You know, Russell, it's a great question, and I think the best ideas always seem simple and always seem obvious in hindsight, but it took a lot of iterations for us to get here and to get to lending as it is in DeFi. And I also think it's somewhat that the people building DeFi protocols do not have access to the same financial tools that hedge funds and large financial institutions do in traditional finance. When Jeff Bezos wants to buy a new $500 million super yacht, which he did, he doesn't sell Amazon stock. He borrows against it, which he did, right? And that is something that the ultra rich always have access to. But most of the DeFi hackers that I know are young people that have not already made billions of dollars, right? We're figuring things out, and so there's these types of primitives that not everyone has access to, and so they're not an inspiration for the type of protocols that have been built so far. So we're trying to bring Open Dollar to everyone and make these kind of primitives that exist in traditional finance finally usable in DeFi, and then because it's DeFi, accessible to more people.
So if you take like the typical Web3 worker, maybe they're working with Opolis or something like that, and they don't have other sorts of investment tools necessarily that people who have regular employment would this help them? Like, could they start setting up their sort of retirement, or let's say they're sitting on $5,000 or $6,000, they want to start saving for their retirement or something like that? Would that be a good use of this, or would
Yes,
it be?
I think it's possible because I think my great grandkids are going to retire on my 1 ETH validator, right? That's how bullish I am, right? So maybe, who knows? But I think there are DAOs like Raid Guild that person might be working for that have a big DAO treasury split between a lot of people, and that's one of our target customers is people with big DAO treasuries, and they might be holding staked ETH or a liquid stake token of ETH and sitting on that yield and earning a bit, and they want to be able to pay those individual contributors, pay those freelancers, and meet their monthly bills, but they don't want to have to sell their ETH. Now you can borrow against it at a rate that is so cheap. The rate that we're charging, 2% or less, is less than the yield on Lido ETH. So that means that your loan, is not going to necessarily pay itself off on a reasonable timeline, but it is paying for the yield is paying for the interest that you're being charged, right? So now those DAOs and those organizations like Opolis can access more capital without having to sell and pay taxes, which makes their entire operation more capital efficient.
So this would be like something like with Links DAO or something like that. They could have, or you have a DAO that's just to buy something, right? That you could fund that treasury and then get a loan on it to do it, and you wouldn't have to liquidate the treasury. You wouldn't have to do
That's
any of
right.
that stuff.
Yeah.
That's a huge plus.
I think it will be, and the fact that the entire position is an NFT means that if you ever need to liquidate that position quickly, you don't have to go find more capital. If you've already taken that OD you borrowed and invested it in other projects, or created a leveraged position, or gone and bought other tokens, or just sold it so that you can have your monthly expenses, right? If you need to get out of that position in the future for any reason, you don't need to go find more stablecoin and pay back your loan. You can sell the entire position as an NFT, which is extremely to do with all the existing NFT infrastructure that has been built around DAOs, around NFT marketplaces, and you can use that. So we get to tap into all this existing infrastructure. And because you can get out of those loans easier, you can create higher leverage positions or take on more risk than in traditional DeFi lending marketplaces.
That's great. Is there what can we do to learn more as individuals about what you're doing, and how can we be a part of it?
You can go to opendollar.com and read our documentation or our blogs on some of the principles or motivations behind the protocol. Hang out on Discord or Farcaster and learn more there, or come see me afterwards and talk to us as human beings and see how else we can collaborate.
Okay. Thank you very much. That's been great.
Russell, can you take a picture of me in front of the Open Dollar before I go? Oh, sorry. Thank you. Oh, yeah, it's definitely going to die in like 10 seconds.
Go Open Dollar.
Go Open Dollar.
Good.
Is he taking it? I don't know.
No, it's a camera.
Oh, it's a camera?
It's digital.
You got it? All right.
We're like those. Okay, you can take the picture now on video.
Okay. 1 second.
Oh.
That's all right.
Open Dollar Paisanos. So much.
Yeah.
We've had people taking pictures all around too.
Now we lost the background. Is it okay? It's okay.
We good? Oh. No technical problems.
Any other questions from anyone while we're here? We still have 3 minutes on the clock. No? It's very clear. Yeah, there's a token. It's called Open Dollar Governor, ODG, and it's live on Arbitrum. Not financial advice. Yeah. The technical structure of the vaults. Every vault is an ERC 721, and you can transfer it normally. You can approve it normally, and it is the images of the vault is actually. This is what it actually looks like. There's like an image, and it's rendered as an SVG on-chain. Yeah, it's really cool. So 721 is compatible with every NFT marketplace. Are the assets in the TVA? Token-bound account. No, the assets are in the CoinJoin, which is part of the Safe engine. But the ownership of the assets is owned by the Safe, and the Safe has a particular owner, which matches the NFT owner. Excellent. Thank you for that great question.
Okay. We good?
Did we take a picture? You already took one?
Yeah.
All right, cool. He's making fingers at me. I don't know what that means. You good? All right. Thank you, guys.
Thanks a lot. Next up, we have Build Cities. We have Angelo coming up to tell us all about what they are doing. Woohoo! And, oh, let's see here. So a lot of these guys got here in the nick of time because we rescheduled when we were going to do this to have it be on a larger stage, and so some people we're running on no sleep or very little sleep and doing presentations on the fly. And so appreciate the founder's journey. I see you're much better than me. Isn't there a control code you can do? We are good to go.
Where's the,
Take it away.
stand? Can
Oh,
I
you
use
want-
it? Or
There was one over here.
that's okay.
Oh,
I can use this. Oh, this is fine. I'll use
Sure.
this. Yeah,
Okay.
I'll just hold this. All right. Good morning, Denver. Good morning, ETHDenver. Let me ask you a quick question. Raise your hand. How many of you feel a very strong affinity for an online community? Okay, got some hands here, got some hands over here. Okay, great. And how many of you feel a very strong affinity for the physical neighborhood you live in? Got some hands over here, some more hands here. Okay, cool. Good crossover. And then now, how many of you have heard of the network state? All right. So equivalent hands all around. So this is the right audience. I'm in the right place. So my name is Angelo. I'm one of the founders of Build Republic. And we are building a global cooperative of startup cities and the operating system for network states. So I want to start off by sharing just a little kind of origin story that ETHDenver and Buffalo Ventures are really near and dear to our heart, as this is really where we got our start so it was two ETHDenvers ago. And our first check, Buffalo was an investor as well, and so that we could go ahead and start building. Now you also notice a keyword cooperative in here, which is actually the same structure as SporkDAO and the nested Buffalo Ventures entity. And so I don't know if you saw the tweet going around, but basically ETHDenver generated $100 million of impact for the city of Denver, thanks to the builder energy here that comes in every year from ETHDenver. So when we see that, and we see that kind of excitement and all this innovation coming into one town, we're thinking at Build Republic, how do we scale that to any city around the world? And so one way to look at what we're doing with our platform and the Build Republic Cooperative is meant to replicate the same experience any city around the world on a 24/7, 365 basis. So kind of the life cycle of innovation ecosystems in any city. Our main thesis really is that talent, opportunity, and innovation will be evenly distributed over the next decade, and the built environment, which is real estate infrastructure, will be an extension of these shared centers of gravity of shared values and ambitions, right? You know, GDP of the internet does not have latitude, longitude coordinates. You can create value anywhere and reinvest that into local ecosystems. So our mission, this is really our mission within the context of that thesis, is to unlock the hidden equity in communities around the globe by activating IRL startup ecosystems and economies in areas where there were none before. So by creating on-chain digital twins of any city in the world, we're breaking down the last remaining barriers to innovation and economic development so that opportunity is equally distributed no matter where you live. So, because you see today, equity is really trapped in would-be founders and ventures due to proximity, politics, or perception. So proximity, resources consolidate into a handful of ecosystems, the Silicon Valleys of the world, New York, but now crosses border over the internet. Passports limit our physical mobility, but we now teleport over Zoom. Perception of pedigree feeds bias, but Git repos and design portfolios show that merit is merit. So at Build Republic, we ask ourselves, hey, what if every city in the world had the same resources as Silicon Valley? What if the same alchemy that birthed Y Combinator, Airbnb, Coinbase, et cetera, could be distributed through cyberspace and manifest in the built environment of any city in the world, solving the problems that matter to them where they are at? Well, we'll go straight into screenshots are a little bit easier to work with. So this app is live today. The protocol is live. It's been out for just over 6 months, and very easily log in. Right now, you just log in with the Discord. It surfaces all your digital networks
and then overlays them in your physical city. So if you log in with and select the ETHDenver Discord, and then go ahead and pick your favorite cities, you would be able to actually see, oh, here's all the ETHDenver folks, you know, in Austin or London or Sydney, Australia. And so after this conference ends, you can still connect with those people, again, in any city. So this is just a kind of screenshot of the main dashboard you see. We'll dive into the Denver directory. And again, same thing. You can look for folks by both skill. So if you're looking for a designer from ETHDenver in Denver, you can look here. If you're looking for somebody from, you know, the Ethereum Foundation, and you're looking specifically for a specific skill set, you can do all those kind of filter searches in each city. And then again, you can also, the same way that you can view city directories, you can also view different networks. So if you wanted to find, if you encountered an ecosystem, let's say Open Dollar, you're in their Discord, and you like what they're building and you want to connect with more people from that community, you can very easily see who's in that community and where they're at in the world. And by the way, that's not like, there's no GPS tracking, it's just you opt into the city, so it's at the city aggregate level, not exact coordinates. And then again, same way that you can see in the directory, you can see the people. Each person has a profile which shows the networks they're a part of, NFT collections they're a part of. We just introduced live video conferencing and live streaming in the platform. So this is taken from one of our weekly meetings of builders. These are representation from 5 different unique countries. And again, every week we're starting to host what's called our Builders Forum, where people from projects come together and help each other move the needle forward for their projects. In a few weeks, we'll actually be dropping an AI agent that will automatically transcribe the contents of the meetups that anybody can spin up a room for, and you can actually surface. It'll actually make suggestions, be like, oh, you should connect with this person from Denver or this person from London regarding this project. And that's an LLM that's tagged onto the database of the network. This is our membership kind of gallery. So the protocol is already generating revenue, and 90% of the proceeds from membership actually get reinvested back into the cities. And I'll get into that in a little bit. So we're kind of dog fooding our own infrastructure also with our own community. So again, I mentioned the premium membership. That's live today. You can mint the membership, be a part of it. And we're building the infrastructure now for resident tiers, which touches a little bit more of the IRL components, third spaces, hacker houses, and actually meeting places in cities where people can connect, work on the projects that they want to work on, and really help each other out. And then the citizen tier, that's a little bit down the line. That's kind of touches more on the network state concepts. Another way, kind of look at this, Gitcoin for cities. But this is where we're going. So this is the final kind of form, really, of every city where you would literally be able to go into the platform, check out whatever city you're either visiting or thinking of moving to or are already currently in. You'd be able to see the projects people are working on, the events that are going on in that city that relate to innovation and building and entrepreneurship, physical spaces, so that's third spaces, that's hacker houses, that's co-working spaces, and we're allowing people to list those on the directory. And then the final piece is the treasury and governance. So that's literally, actually, each city will have its own treasury for capital allocation into the projects, events, and some of the other ecosystem development stuff. This is our roadmap. We're delivering the remaining 80% of that city stack this year, and then 2025 we'll add on the final remaining layers, which mainly relate to governance and treasury. But that's where we're at today, and that'll be kind of the foundation for growth for tomorrow. So again, for those of you who are familiar with the network state, which looks like there's a lot of folks in the audience who are, this is the space that we operate in. And just a quick kind of network state in one sense for those who are not familiar. A network state is a highly aligned online community with a capacity for collective action that crowdfunds territory around the world and eventually gains diplomatic recognition from pre-existing states. Build Republic, in essence, becomes the operating system for any online community to take these very steps and create their own full stack startup society, city, and even new states. So this is kind of an overview on the left. You'll see the current, this was taken from, I believe it's, Crunchbase data of seed stage equity funding for the last 1,000 deals, I think, over the course of the last year. And you'll notice all the hotspots, right? They're in the places you expect, Silicon Valley, New York, in Europe there. And then on the other side here, you see crypto asset activity scaled by a country's GDP. So the larger bubbles indicate the higher activity relative to the size of the economy. And you can see almost quite nicely the complement of all this economic activity in emerging markets that are not currently served by traditional kind of early stage kind of capital spending. So when we think of network states, we really view it as a vessel to fulfill our mission of unlocking hidden equity in any communities around the globe. And that's what we think the right vehicle to do it is, and that's what we're building. So we've already proven this thesis out. We have a team of 3. Our co-founder has over 10 years of experience building startup ecosystems in smaller cities. So this is an example of a city in Coeur d'Alene. Literally just started with kind of very grassroots meetups. He was doing them up to the point that he was able to get 40 folks regularly meeting. From that, he was able to get local investors, crowdfund a third space that's kind of a multi-use real estate, and actually renovate an old Elks Lodge that hadn't been used for 10 years. And then if you walk in there today, as soon as they open the doors, day one, 100% occupancy, their retention rate's like 98% for the building because that community was built in beforehand. It's been covered in Quartz, The Atlantic, recognized by Brookings Institute, and a couple others. Idaho, this city, Coeur d'Alene, Idaho, has now 2 times more startups per capita than the rest of the state. So yeah. Again, creating on-chain digital twins. I don't want to go into too much detail. I would love to field interest afterwards if you're more interested in how this works. But basically, there's kind of stages. You saw today we have a directory. We'll probably have the first city with its full on-chain treasury in the next 6 months, and kind of the natural progression for each city thereafter, where they start to spin out as their own complete kind of digital twins, basically. And then naturally, as a cooperative, as more cities come online, they're kind of managing their own ecosystems, their own capital allocation. It progressively kind of decentralizes. So we're growing. We mentioned Coeur d'Alene. That's kind of our blueprint ecosystem. And we have more in the pipeline that are, some more active than others. And we very much designed the protocol to be something that you get out what you put into it. So as more projects are in the ecosystem, more events, more activity, that will unlock additional privileges in the platform itself. And again, I mentioned we are structured the same way as SporkDAO. There's a lot of legal jargon to say that we will be a cooperative of startup city ecosystem. So all these cities will be their own entity that nests within the cooperative. And that was very much inspired by SporkDAO and the structure there, because just the economic impact ETHDenver generates for the city of Denver is just really inspiring to think, how can you do that any city in the world, and also on a year-round basis. So talk to me more about that if you're interested, about how that's gonna work. We've tokenized land. We've done a lot of the R&D heavy lifting for the stuff that we'll be introducing later. We have 160 acres of farmland as part of a sub-entity, as a DAO that we crowdfunded on chain up in Northeast Colorado. It's generating revenue. We're streaming that revenue to our members, and that's kind of the exciting components that are in the works. This is our team. I mentioned the Coeur d'Alene ecosystem lead, over 10 years of experience building startup ecosystems in overlooked cities. has consulted with over 200 cities around the U.S. Myself, I'm a veteran turned fintech operator. That's what most of my experience is. And then now working on Build full time. And then our CTO, based in Build Lagos, has over 20 years developing tech products and a serial entrepreneur. So I'll leave you with this. Just a reminder: every city was once a startup. Every city started with the first brick. You can view any city with under 100,000 people. We kind of view that as like a seed stage startup, right? They could grow, not necessarily in terms of population, but maybe value accrual. And, this isn't that crazy when you think about and look at the history of any city around the world that's really just getting the resources of the right people at the right time and in a way that's transparent. We have a conference coming up on Friday, Building Network State Conference right across the street, Forney Museum of Transportation. There's only 15 tickets left. It should be awesome. It's literally it's just a bunch of old cars, and we'll have an open bar at the end, lunch, and just a ton of great speakers from other network state projects that we work with very closely. And you can onboard again today directly in the platform, buildcities.network. And with respect to fundraising, we are fielding interest for our next round that we would love to talk to you about if that's of interest. Thank you.
Thank you. That was great. So I'm interested. What should someone do if they want to kick this off, or like, is this happen from an individual standpoint, or does this happen from elected officials, from a board? Like how should this work? What are the ways it can emerge? I guess
it's a great question. So, I spent a decent amount of time in the Army and learned a lot of valuable lessons about leadership. And I view a lot of this very much as a leadership challenge, right? You want to have an ecosystem lead in a given city. It's somebody who's got to be passionate about driving innovation in that ecosystem, passionate about building startups in a way that's infectious enough for other people to, have an ecosystem to develop in the first place, and then B, believe that this is possible. So, Russell, yourself, as far as what the work you've done for not only ETHDenver, but I think even more broadly, just the Denver and Colorado ecosystem in general, we want to kind of find, surface, and work with leaders like yourself, again, in cities that, again, anywhere in the world, but it does take typically that first person to kind of, light up the torch and then, figure out the next steps for building a startup ecosystem. Brad Feld has a great book on this. We also have our own ecosystem playbook that our co-founders developed. It's called Better. You can find that at flourishingpledge.com. Another great book is Startup Communities by Brad Feld, and that talks all about how he built a startup ecosystem in Boulder, Colorado, which also became home of Techstars. And again, it's one of the most, I think, biggest takeaways from that book was, if you're building a startup ecosystem, you have to look on a 20-year time horizon and always reset the clock every day. So it's always day one and a 20-year time horizon. So hopefully that answers your question, but usually it's just great people and great leaders.
How required is it for this to be a technical tool? I mean, I know it obviously is technical, it's technology based, but for, like, I know of like the city of Trinidad in southern Colorado, right, is a really, really cool, funky place. Not a lot of people, but there are, like, what can we do to improve that place? A lot of people who live there have said that. They've had events. What do you say to a city like that? Can Biddle cities be, I keep calling it Biddle because we use Biddle too much, but can Biddle cities really help a small city like that sort of find its way in a new technical world?
Yes, so that is absolutely kind of our mission, really. And so there's a couple different stories I could share. I've only got a minute left, but you know, our first city that will probably come online as with the full stack of treasury, governance, and everything else is actually where our co-founders base in Lagos. And one of the challenges they have there is not the most reliable governance and legislative foundation to incubate new businesses, to get resources. There's a high risk for external investors to invest into that region. And so we think and we hope that we can provide that infrastructure that not necessarily circumvents, but kind of runs in parallel to the city itself in a way that can still foster innovation in that area and foster economic development, even though it always starts very small, but can kind of grow from there, and that's kind of the hope. So, we're introducing more mechanisms. I'll leave it at that. But please talk to me after if you want to learn more about how we're doing that, because there's a long conversation we could have about that.
I'm not trying to pressure you. I just wanted to give you the opportunity to let people know exactly how to, like, regardless of where they are and what they're doing, like, if they want to do this for their city, what is the best way to reach out to you, to engage with you, and like what maybe 2 or 3 things can they do first to be ready to have a good conversation with you?
Sure. So first, come to buildcities.network, join the platform, and then you can join our internal community. It is on a Discord. If they don't use Discord, we also have Twitter, we have email list, we have the events. We are running virtual events in our platform on a weekly basis that now actually 2 per week. And so we have several different contact channels that you'll find on our website that please definitely reach out to us. And we'll walk you through the process on how this is coming together. And we're also building this together. This is very new and not a lot of reference points, so we're looking for those insights and your feedback, and we don't want to pretend to have all the answers either. So this is a group effort.
I gave everybody else the chance, so I need to give you the chance too. Two things. Are you raising money and opportunity for a 20-second soundbite that will be extremely viral and go all over the place?
Sure. So we are fielding interest now for a upcoming round. I won't disclose when, but please talk to us if you're interested in joining that round. We're reaching a lot of nice inflection points with both growth and revenue, and we want to accelerate our roadmap. We know exactly what we need to build, and we're just looking to do it a little bit faster. 20-second soundbite. I will just say the concept of network states are possible. It may not look like they are how they might be perceived in the book, but we can build parallel ecosystems that support economic development in any market around the world.
Fantastic. Thank you very much. And thank you all for coming. I think that brings us to the end, unless I've forgotten somebody. That brings us to the end. Once again, I'm Russell Castanera, the investment steward for Bufficorn Ventures. Our website is bufficorn.ventures. We're all over Warpcast and Warpcaster and Twitter and even conventional things like LinkedIn. So if you're interested in, you have a startup, or if you're an investor and you're interested in getting in the super early stage alpha part of the business, talk to me. Otherwise, have a great ETH Denver, and I look forward to talking to you one-on-one very soon. Thank you.